Good morning, friends. Good morning, everyone. So happy to see you all in this free face-to-face fast track batch. And first things first, so I don't know with what expectation you came, but I just wanted to give you a clarity as to what I will be providing in this batch. So this GST is going to be like last attempt was very difficult paper. So therefore coming attempts, I don't know whether it is easy or difficult. So but our preparation should be difficult. You understood what I am telling? So our preparation should be thinking that the paper is going to be difficult. We need to prepare that way. And so May 23, don't worry, is going to be pretty easy based on the analysis what I have seen over the last few attempts. Reason being, this time there are amendments. So for May 23 exams, lot of amendments are there. So usually every May exam they will be asking questions on amendments. So easily for 10 to 12 marks will be from amendments only. So therefore whenever I am taking the class, I will tell this is an amendment important from exam point of view. You just mark that as very, very important. Also, so by the time this class is getting over, so you should learn as much as you can. So therefore your objective should be majorly you should try to learn in the classroom itself, and thereafter you should go and do the revision. So preparation should not be at your place. So therefore we are planning this for 4 days, and for the next 4 days, so fully you should be attentive in the class, and whatever I am going to discuss, everything you should remember. And on the day, suppose today our class will get over by 6:30. So thereafter, at least 1 hour today you need to sit and revise as to whatever we have discussed today, so that it will be easy for you tomorrow. And whatever doubts that you have during the break time, during the lunch break, or even after the class gets over, so you can get your doubts clarified. Okay? Fine. So can we start? Yes. So there are 2 books I have made. One is Revise, which is a theory portion, along with illustrations will be there, and the other one is Practice Manual. Practice Manual is compilation of all MCQs, past exam questions, MTP and RTP questions. So that is answered as per the latest amendments. Okay. So therefore first we will complete the concept, and after completing the concept then we will do the problems and solutions. So both parallelly we will be doing. Okay. So let's start with the first area, and you can see here I have provided the overview, segment wise marks distribution. So in page number 5 I have given that. So you can see, like, first question is always going to be a consolidated question, and that consolidated question will be based on like supply, whether an activity is supply or not, exemptions, who is liable to pay tax. So these are all the aspects that we need to keep in mind to answer that question. So we will try to solve more and more questions of this consolidated type. Okay. And but consolidated questions you will be able to solve only when you have the knowledge on at least 3 chapters, that is supply, value of supply, input tax credit, and even exemptions also. So these 4 areas if you are having command, so then definitely this consolidated question will be like a cakewalk for you. Otherwise these 4 chapters if you are finding it difficult, so then consolidated question will be difficult for you, because the first question, last attempt what has happened, November 22, why many students felt it difficult was 2 consolidated questions was given. Usually 1 only will be given for 8 marks. But last attempt they gave 2, that is question number 1 was also consolidated type, even second question was also that type. So that's the reason why paper was little lengthy. You can see 14 marks on consolidated itself, 14 marks has been tested in the last exam. That's the reason why students felt the paper was lengthy and they were not able to do. And don't worry, not every attempt is going to be like that only. So this page number 6, you can see page number 6 and 7. These are all the amendments that we have, along with the page number reference I have given. So what you need to do is that this amendment, one day before the exam, you need to definitely revise it and go. So mark that as important for one day revision, one day before exam revision. Must. These amendments and all you should cover and go, because as I already told you, what is the weightage of amendments? Usually 10 to 12 marks. 10 to 12 marks will be there on amendments. So that's the reason why one day before the exam, you need to revise all these amendments, and along with that page numbers I have given, so that you need to revise and go. Then let's start with the segment 1, that is introduction to GST. So many of you might be knowing introduction to GST, but even then, so I will take this class assuming that you are attending for the first time only. Okay. So therefore, wherever still like you are finding it difficult, etc. and all, don't hesitate. You just ask me in the doubts, whatever you have. Okay. And so first, introduction to GST. How GST formed? Is GST a new law? No, GST is not new law. GST is formed by subsuming various old indirect taxes. What are the various old indirect taxes that got subsumed into GST? So we had indirect taxes levied by central government, that is central excise duty, then service tax, central sales tax, and customs duty. But is customs duty part of GST? No. But inside customs duty, we had additional customs duties. What were those additional customs duties? CVD and SAD. CVD full form is what? Countervailing duty. SAD full form is what? Special additional duty. So CVD is to counterbalance excise duty and SAD is to counterbalance sales tax. So let's try to understand what is the purpose of this CVD and SAD first of all. So that is, whenever a product is being imported, on import of that product, so there was no excise duty, but the same product, if locally purchased, there was excise duty. So to counterbalance that excise duty on imported article, they have levied something called as CVD. And excise duty got subsumed into GST or not? Yes. As excise duty got subsumed into GST, so that CVD, which is to counterbalance excise duty, that also got subsumed into GST. Are you understanding? Then sales tax got subsumed into GST. Yes, sales tax got subsumed into GST. Special additional duty is levied to counterbalance that sales tax. That is, when you are importing an article, there won't be sales tax, because sales tax will be applicable only when that article is being sold in India. But on import, there is no sales tax. So the same article, if purchased in India, there is sales tax. So to counterbalance that sales tax, so they have levied something called as SAD. As sales tax got subsumed into GST, SAD also got subsumed into GST. So therefore, what is the first point that you need to remember? How GST is formed? All indirect taxes levied by, come on, all indirect taxes levied by central government except customs duty. But inside that customs duty, two additional customs duties were there. What are they? CVD and SAD got subsumed into GST. That is the first one. Then what about this service tax? Service tax also got subsumed into GST. Then when it comes to state excise duties, state excise duty or state VAT, like that, many state taxes were there. Whether all state taxes got subsumed into GST? No. Only 6 state taxes got subsumed into GST. They are value added tax. Whenever intra-state sale used to take place, value added tax used to be levied. That value added tax got subsumed into GST. Then purchase tax also known as octroi. Purchase tax also known as octroi, that also got subsumed into GST. Then taxes on lottery, betting and gambling. I am not talking about income tax, tax on lotteries, betting, gambling. So there, winning from horse races, bettings, etc., we have income tax. Previously, state government also used to levy some indirect taxes on lottery and betting. Even that also got subsumed into GST. Then entertainment tax, luxury tax and advertisement tax, even that got subsumed into GST. So total 6. What are the 6 specified state indirect taxes got subsumed into GST, value added tax, purchase tax, lottery and betting tax, entertainment tax, luxury tax and advertisement tax. Now in MCQs they will be giving question like this: which of the following is not subsumed into GST? In that, so say we have local body tax. Is it subsumed into GST? Local body tax. In the 6th, whether we have local body tax? No. Professional tax is there in the 6th? No. And whether we have state excise duty in the 6th? State excise duty? No. We have only central excise duty levied by central government got subsumed into GST. So you just write down what are the state government levies that are not subsumed into GST. So because that idea you need to know, so then only in MCQ properly you can select the answer. What are the state government levies not subsumed into GST? So I am just giving you some list. Local body tax, state government indirect taxes, not subsumed into GST. What are the state government indirect taxes not subsumed into GST? Local body tax. Then we have professional tax, then state excise duty, and number 4, municipal tax. So these are some examples, etc. Not necessary that these are only not subsumed, etc. All others. So like this, if there is any state government levy, so just you need to check whether 6 state government levies are given in the question. So if it is there, that is only subsumed into GST. All other state government levies not got subsumed into GST. Is it clear? Then what about indirect taxes levied by local authority? Whether that got subsumed into GST? No. Indirect taxes levied by local authorities not got subsumed into GST. It is only indirect taxes levied by central government, state government, but indirect taxes levied by local authority not got subsumed into GST. Example, property tax, entertainment tax, professional tax, etc. So whether they got subsumed into GST or not got subsumed into GST. So indirect taxes levied by local authority not got subsumed into GST. Okay. So it is not got subsumed into GST. So therefore, what are the 3 points that you need to remember? What are the 3 points you need to remember here? Indirect taxes levied by central government except customs duty, but including CVD and SAD got subsumed into GST. Then indirect taxes levied by state government, specified indirect taxes. What are those specified indirect taxes? 6. Value added tax, purchase tax, entertainment tax, luxury tax, advertisement tax, betting tax. Okay, so these 6 indirect taxes levied by state government got subsumed into GST. Indirect taxes levied by local authority got subsumed or not got subsumed into GST? Not got subsumed into GST. So at present, what are the 2 major indirect taxes that we have? GST and customs duty. And whether India follows single GST model or dual GST model. Dual GST model means what? On the common tax base, both central government and state government parallelly shall levy tax, that is known as dual GST model. For example, when you go to a restaurant and eat food for 100 rupees, 2.5% CGST and 2.5% SGST we pay na. So that 2.5 is known as dual GST model. So therefore, central government will have how much percentage? 50%. And state government will have how much? 50%. So therefore, this central government and state government will share equally. Okay. So they are equal partners in crime. You understood or not? So therefore, central government and state government ratio is how much here? 50:50. Suppose if the rate is 18%, then 9% and 9%. Now, there is one important point. in exam, what many students are doing is that, so whenever it is given as CGST 9%, SGST 9% and IGST 18%, students are just taking 18% and doing the answer as per, IGST fully. But that should be avoided. So whenever in the question, you can see tax rate as only one rate, you can do single computation. Whenever you can see in the question, CGST 9%, SGST 9%, IGST 18%. So you need to prepare a table like particulars, CGST, SGST, IGST. So how do we know, sir, whether a particular transaction is intrastate supply or interstate supply? So that we will see. I will tell you how to identify that, simple only. So but try to remember now. So whether India follows single GST model or dual GST model? Dual GST model. And this dual GST model India has adopted from which countries? Brazil and Canada. So useful for MCQ, Brazil and Canada. Then, so what are the types of GSTs that we have? These types of GST depends upon the supply, types of supply, intrastate supply versus interstate supply. So supply is broadly divided into two, intrastate supply and interstate supply. What is this supply? Supply is the taxable event under GST. So taxable event means what? Whenever one event happens, we are required to pay GST, that is known as taxable event. So what is the taxable event under GST? Supply of goods or services or both. In short, you can remember it as supply. So this supply is divided into two, intrastate supply and interstate supply. Intrastate supply means what? Come on. If location of supplier and place of supply, location of supplier and place of supply is in two different states or single state? Single state. Inter means two different states, intra means single state. Single state or single union territory, then it will be known as intrastate supply. So what are the two factors that we need to keep in mind? Location of supplier. So whenever you see the question, to know whether it is intrastate supply or interstate supply, first see the location of supplier. This will be easily identified in the question. So they will give Mr. X registered in Tamil Nadu, Mr. X registered in Karnataka, like that clearly in the question itself it will be given. So take that, location of supplier, okay. And then place of supply, place of supply. Place of supply, how to identify, sir? Generally it will be given in the question. If not given in the question, if it is goods, you take the ending point of the goods. If it is services, you take the location of recipient. Is it clear here? So what should be taken as place of supply? 80% it will be given in the question itself. As to this is the place of supply, like that. If suppose they have not given that in the question, so what should be taken as place of supply? If it is goods, ending point of goods. If it is services, location of recipient. So if it is goods, ending point of the goods. If it is services, location of recipient will be taken. So the location of supplier and place of supply determines whether a transaction is intrastate supply or interstate supply. If the location of supplier and place of supply, these two in same state or same union territory, then it will be known as intrastate. And whenever it is intrastate, even same union territory also, it will be intrastate only, not intra-union territory, intrastate only. And same state, what are the type of taxes that we have? Same state means CGST plus SGST. If it is same union territory, what are the taxes that we have? CGST plus UTGST. CGST and UTGST. This is the combination. So either it will be CGST plus SGST or CGST plus UTGST. So what is the full form of CGST? Central Goods and Services Tax. Who will levy CGST? Who will retain that CGST? Central government. Then SGST, who will levy? State government. Who will retain that SGST? State government. Who will levy UTGST? Union territories. No, it is central government. UTGST is levied by central government only. So CGST also levied by central government, UTGST also levied by central government. Then why we have two separate GSTs? Because how much revenue union territories are contributing for GST needs to be separately accounted. For accounting purpose only, it has been given separately. Is it clear or not? So therefore, UTGST is levied by central government, collected and retained by central government. Okay. Then next, what is the meaning of interstate supply? Again, two factors. What are the two factors? Location of supplier and place of supply. So place of supply in case of goods, ending point of goods. In case of services, location of recipient. Somewhere you please write down. So place of supply in case of goods is ending point of goods. Place of supply, in short POS. Place of supply, in short POS. In case of goods, it is what? Ending point. In case of goods, we need to take it as ending point. And in case of services, we need to take it as location of recipient. Location of recipient. But this you need to do only when there is no information in the question. In the question, if they say this is the place of supply, you go by that place of supply only. When the question is silent, then you need to take this way. Okay. So place of supply in case of goods is ending point of goods, and in case of services, location of recipient. So therefore, location of supplier and place of supply are the two factors. And if it is in two different states, correct? Two different states, two different union territories, or a state and a union territory, then it will be called as interstate supply. Inter, not intra, interstate supply. So in case of interstate supply, what is the GST that will be applicable? IGST will be applicable. Who will be levying? What is the full form of this IGST? Integrated Goods and Services Tax. Who will levy this IGST? Central government will levy this IGST. Can central government retain this IGST fully? No. 50% they will retain, and remaining 50% they have to give. Give it to whom? Give it to the consuming state based on place of supply. So it will be given to consuming state based on place of supply. For example, if location of supplier is in Tamil Nadu and place of supply is in Andhra Pradesh, and even location of recipient also Andhra Pradesh. Okay. Location of recipient also Andhra Pradesh, place of supply also Andhra Pradesh. This will be interstate supply, correct? Because location of supplier and place of supply is in two different states. So therefore it is interstate supply. What is the type of GST that will be applicable? IGST. So the supplier who is located in Tamil Nadu will pay IGST to government. In that IGST, so which government they will be paying? Central government or state government? Central government. Central government, they will pay IGST. Who will pay IGST? Generally supplier will pay IGST. In this, 50% will go to central government and remaining 50% will go to state government of Andhra Pradesh, that is consuming state. Understood or not? So that's the reason why GST is called as dash, destination based consumption tax. Somewhere you write down GST is termed as destination based consumption tax. GST is termed as destination based consumption tax. GST is termed as destination based consumption tax. As 50% of IGST revenue, is shared with consuming state. Okay, then next, so that is this types of GSTs. So first we need to know what is intra-state supply, then we need to know what is interstate supply. In case of intra-state supply, the combination will be CGST, SGST or CGST plus UTGST. In case of interstate supply, it will be IGST. In that IGST, 50% will be shared with the consuming state based on place of supply. And there is something called as GST compensation cess. So what is the purpose of this GST compensation cess? So here what happens is that whenever interstate sale takes place, 50% will be given to the central government. Remaining 50% will be given to state government of Andhra Pradesh, that is consuming state. Then the originating state is not getting any GST revenue, correct or not? So therefore in that case, the originating state revenue will come down. To compensate that state on account of implementation of GST, we have something called as GST compensation cess. So what is the objective of GST compensation cess? To compensate the states on account of what? Loss of revenue. On account of what? GST implementation. So whenever GST is implemented, there will be loss of revenue to states. All states or some states? All states or some states? Some states, not all states, some states. Which states usually will have this issue? Producing states. Producing states will have the loss of revenue, not the consuming states. Why not consuming states? Because GST is now what type of tax? Destination based consumption tax. Means it will go to the consuming state. So therefore which states will have the issue? The originating states or the producing states. So for the producing states, they will be giving some compensation. So what is the objective of GST compensation cess? So to compensate loss of revenue to states on account of implementation of GST. That is the objective. To compensate loss of revenue to states on account of implementation of GST. So to compensate that states, government will be levying some cess called as compensation cess, GST compensation cess. This GST compensation cess is applicable on all goods or only on notified goods? Only on notified goods, not on all goods, only on notified goods. And what is the period for which this compensation cess will be levied? Initially, it was 5 years from the date of implementation of GST. What is the date of implementation of GST? 1st July 2017. 1st July 2017 is the date of implementation of GST. From there 5 years. From there 5 years means, so 2018, 19, 20, 21, 22. By 2022 it is over. So therefore they have extended it further. So it is extended up to which date? 31st March 2026. That is an amendment we need to remember. So what is the period for which GST compensation cess is extended? Extended up to 31st March 2026. Now, see this illustration. So have a look into this. Location of supplier Tamil Nadu, place of supply Tamil Nadu. So what is the nature of supply? Intrastate or interstate? Intrastate. So what is the taxes that will be applicable? CGST and SGST. SGST of which state? Tamil Nadu. Okay. Then location of supplier Tamil Nadu and place of supply Karnataka. Intra, interstate. So what is the type of GST that will be applicable? IGST. And this IGST, whether 50% is shared with the state government? Yes. Which state government? Tamil Nadu or Karnataka? Karnataka, consuming state. Okay. Then next, location of supplier Jammu and Kashmir, place of supply Ladakh. What is the nature of supply? Intra or inter? Inter. Because Jammu and Kashmir and Ladakh are two union territories and therefore now it is not a state. So abrogation of Article 370 to the Constitution. So Jammu and Kashmir, which was previously a state, is now divided into two union territories. What are the two union territories? Union territory of Jammu and Kashmir and union territory of Ladakh. So therefore these are two union territories. So what is interstate supply? You said if location of supplier and place of supply is between two states, two union territories. It is between two union territories na. Therefore it will be interstate supply. Chargeable to which tax? IGST. And in case of this IGST, who will collect this IGST? Central government. Whether 50% is shared with the consuming state in this case? No, it will not be shared with the consuming state. Why like that? Because there are 5 union territories which are treated as union territory without state legislature. What are those 5 union territories without state legislature? Without state legislature. Without state legislature means what? Without state legislature means they will be treated like central government only. They are part of central government only. They are not treated like states. If it is with state legislature, they are treated like state government. If it is without state legislature, they are treated like central government. So what are they? Number 1, so Ladakh, correct. Andaman, then Lakshadweep, then Chandigarh, then number 5, Daman, Diu, Dadra and Nagar Haveli. Okay, so these Daman and Diu, Dadra and Nagar Haveli were 2 union territories. Now it is merged into a single union territory. Dadra, Daman, Diu and Nagar Haveli. So these are the 5 union territories without state legislature. With state legislature or without state legislature? Without state legislature means whenever you see place of supply as these union territories, 50% sharing to state government will not be there. Means 100% of the IGST will go to central government. So therefore, as Ladakh is a union territory without state legislature, IGST 50% will be shared with the consuming state? No. So means completely it will be retained by, come on, central government. Then next one, location of supplier Ladakh and place of supply Jammu and Kashmir. Now, intra or inter? Inter. Because again 2 union territories, inter. Now 50% will be shared with the consuming state. Yes. Why? Because whether we have these 5 union territories without state legislature in the list of place of supply? No. Others means 50% will be given. So therefore 50% shared with Jammu and Kashmir. Then next, location of supplier Ladakh and place of supply also Ladakh. Intra or inter? Intra. And what is the type of GST that will be applicable there? CGST and SGST or UTGST? UTGST. Why UTGST? Because for these 5 union territories without state legislature, what is the type of GST that is applicable? UTGST. As these are under the control of central government, the type of GST for these 5 union territories put together is UTGST only. Therefore, here it will be CGST and UTGST. Next, location of supplier Jammu and Kashmir and place of supply also Jammu and Kashmir. Then this is union territory, okay, but should be treated like state. So there are 3 union territories with state legislature which will be treated like states. So what are those 3 union territories with state legislature? Vinod? Yes, yeah. State legislature, union territories with state legislature. Number 1, Jammu and Kashmir. Number 2, so Delhi. And number 3, Puducherry. So these are the 3 union territories with state legislature. Means what is the type of GST that is applicable here? Which GST will be applicable here? CGST, SGST or UTGST? SGST, because they are treated like state. So therefore, Jammu and Kashmir, even though it is a union territory, but it is treated like a state. So therefore, location of supplier Jammu and Kashmir and place of supply also Jammu and Kashmir. So therefore, what is the nature of supply? Interstate or intrastate? Intrastate. And therefore, the type of GST that will be applicable will be CGST and SGST. Then location of supplier Tamil Nadu, place of supply Puducherry. Puducherry is union territory with state legislature or without state legislature? Means treated like a state. So Tamil Nadu and Puducherry. So therefore, what is the nature of supply? Intra or inter? Intra. Sorry, intra or inter? Inter. Inter, correct. And in case of inter, what is the type of GST? IGST. Here 50% will be shared with Puducherry or not? Yes. So because Puducherry is union territory without State legislature, correct? With state legislature. With state legislature means what is the type of GST? Yes, GST. So therefore 50% will be shared with the consuming state. So that is with respect to this. Then next, so this is the meaning of union territory. So this is what I told, 5 union territories are there where UT GST Act will be applicable. Andaman and Nicobar Islands, Lakshadweep, Dadra, Nagar Haveli, Daman, Diu, Ladakh, Chandigarh and any other territory. So this any other territory means, so what is this any other territory? What is this any other territory means? Any other territory means beyond the territorial waters and up to 200 nautical miles from baseline, because remember what is the meaning of India? India extends up to 200 nautical miles from the baseline for the purpose of GST. So GST law is applicable to India. So what is the meaning of India? Just write down there. What is the meaning of India here? Up to 200 nautical miles, up to 200 nautical miles from baseline, up to 200 nautical miles from baseline is known as India. So which means even if the supply takes place in the waters, so 200 nautical miles from baseline, baseline means what pa? Shore pa, shore of India, baseline, ending point of India. So from the seashore, in the sea, India extends up to 200 nautical miles. But if there is any country within this 200 nautical miles, that is not belonging to India. But within 200 nautical miles, Sri Lanka is there. Is Sri Lanka belonging to India? No. So if there is no country or some island which is not captured by any country and captured by India, example Andaman and Nicobar, Lakshadweep, these are all within 200 nautical miles. So will be called as India. So whenever the transaction takes place in the territorial waters or this 200 nautical miles from baseline, that is also called as supply taking place in India. Example, usually this oil rigs and all is there, crude oil extraction. This oil rigs and all, they will be having somewhere in the sea basin, that is seashore. So there what they will do, they will put one oil rig and they will extract the crude oil beneath the ground. Okay, so this particular activity, so whenever they are doing, to that person you have provided some services, where the service is provided in the land or in the waters. Waters. So will it be also called as supply taking place in India? Yes, supply taking place in India. Will it attract GST? Yes, it will attract GST. And what will be the type of GST that will be applicable? You are located in Tamil Nadu pa. That oil rig or that ship is located in the waters. So what is the nature of supply? Other territory. Other territory is also given in union territory, which means it will be coming under interstate supply. So chargeable to IGST. Can you remember this? So whenever supply takes place in the waters, so 200 nautical miles from the baseline is India. So whenever supply takes place in the waters, so it may be in a ship or in an oil rig, etc., that will be treated as interstate supply and chargeable to which GST? IGST. Okay. So maybe this point can be tested, but for the purpose of India definition, you remember up to 200 nautical miles from baseline. Then what are the various laws that we have? That is one CGST Act. So CGST is levied by central government. So therefore one CGST Act, and SGST is levied by state government. So how many state governments we have? How many state governments we have? 28 states. 28 states plus 3 union territories with state legislature. 3 union territories with state legislature. What are the 3 union territories with state legislature? Already we have seen Delhi, Jammu and Kashmir, Puducherry. So total how many SGST acts we will have? 31 SGST acts. So therefore one CGST act, then 31 SGST act for 28 states and 3 union territories with state legislature, and one UTGST act. One UTGST act for 5 union territories. What are those 5 union territories? We have seen now that 5 union territories without state legislature. For that, one UT GST Act and one IGST Act for entire India levied by central government. And GST requires dual GST, means both central government and state government should make the law. For that reason, a constitutional amendment was required. Before bringing GST into picture, they have amended the constitution. So that constitution amendment happened in 2016 or 17, 2016 or 2017. When the constitution amendment has happened? 2016. So in MCQ they will confuse you by giving 2016, 2017. But constitution amendment has happened in which year? 2016. Bill is presented in 2014 and it became act in 2016, and then in 2017 GST implementation has happened. Is it clear? 2014 bill. What bill? Constitution amendment bill. And it became act in 2016, and thereafter GST implemented with effect from 1/7/2017. Then next, so position of goods under GST in comparison to earlier indirect tax system. Whether all goods are covered under GST? No. So there are two products which are not covered under the ambit of GST. What are they? Alcoholic liquor for human consumption and petroleum products. What are those petroleum products not covered under the ambit of GST? Total 5 petroleum products. What are those 5 petroleum products? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. These are the 5 petroleum products not covered under the ambit of GST. So which means there is no GST on that. And whether this alcoholic liquor for human consumption excluded from the ambit of GST, permanent exclusion or temporary exclusion, means it will never come into the ambit of GST. What about petroleum products excluded from GST, permanent exclusion or temporary exclusion? Temporary exclusion. When it will be coming into the ambit of GST? As and when GST Council decides. I am also telling this for last 5 years. I don't know when they will decide. So, but as on today, it is still outside the ambit of GST. Okay. So therefore, kerosene oil, is GST applicable or not? Kerosene oil. Why? Because it is not in the list of petroleum products. Then LPG, liquefied petroleum gas, whether GST applicable or not? Yes. Again, because it is not in the list of 5 petroleum products. Engine oil, lubricating oil, engine oil, tutti oil, lubricating oil, etc. Whether GST will be applicable? Yes. Again, why? Because it is not in the petroleum products. What about cooking wine? Is it alcoholic liquor for human consumption? No. So therefore, that will be coming under GST? Yes. So suppose if it is alcoholic liquor for human consumption only, it will not come. Then what about cough syrup containing alcohol? Usually cough syrup contains an element of alcohol. So then that is also alcoholic liquor for human consumption? No. It may contain alcohol, but that is not for human consumption. So therefore there is no GST, or GST is there. GST is there because it is not a alcoholic liquor for human consumption. So therefore what are considered as non-taxable supplies under GST? Come on. Non-taxable supply means no levy of GST pa. What are non-taxable supplies? Alcoholic liquor for human consumption and petroleum products are the 2 non-taxable supplies under GST. Only 2 non-taxable supplies, that is alcoholic liquor for human consumption and petroleum products. Now on alcoholic liquor for human consumption there is no GST. Then at present what are the indirect taxes that will be applicable? State excise duty, CST and VAT. Okay. What are the existing indirect taxes that are applicable on alcoholic liquor for human consumption? State excise duty, CST and VAT. State excise duty who will levy? State government. So that revenue will go to state government. CST who will levy? Central government, but collected and retained by state government. Somewhere you write down. CST even though levied by central government, CST even though levied by central government, but collected and retained by state government. CST even though levied by central government, but collected and retained by state government. So therefore this revenue CST go to central government or state government? State government. Value added tax who will levy? State government. Collected and retained by state government. which means on alcoholic liquor for human consumption, entire revenue will go to, so revenue will not go to central government. Is it clear? Then next, petroleum products. On petroleum products, there is no GST. So therefore, what are the indirect taxes that are applicable on petroleum products? Central excise duty, that will go to central government. Then CST and VAT, that CST and VAT will go to state government. Then tobacco and tobacco products, whether GST is applicable on tobacco and tobacco products? Yes. Not only GST, but also old indirect taxes. What is it, old indirect taxes? Central excise duty, which means on tobacco and tobacco products, we need to pay old indirect taxes, central excise duty, and the new indirect taxes, that is GST. Then all other goods, we don't have any old indirect taxes, only new indirect tax, that is GST. Is it clear? So now, therefore, what are considered as non-taxable supplies? Only these two, alcoholic liquor for human consumption and petroleum products. Whether services are covered under GST? Yes. Few are taxable, few are exempted. Now, whenever you see question in exam, you need to ensure that you are applying this 5 checklist. So in order to arrive at the answer. Okay. So this flow chart you please make note, because many students, what they see is that taxable are exempted directly. But actually first you need to check whether a transaction is supply or not a supply. See, first the transaction should become supply, and thereafter that will be taxable or exempted. You understood or not? So therefore, first what you need to check, whether the given transaction is supply, whether the given transaction is supply. If the given transaction is supply, if the answer is no, then what is it you need to write in exam? Okay, pa, you read the transaction, pa, the transaction is not a supply. So what you will write? The said activity is not a supply. Don't write exempted. If you write exempted, so you will not get marks. If you write GST not payable, you will not get marks. You understood what I am telling? See, it's not about, many students are losing marks not because they don't know the subject. They know the subject, but they don't know what to properly write in the answer sheet. Are you getting this? So therefore, when the transaction is supply, no, it is not a supply. Then you need to write the said activity is not a supply. Then okay, suppose if the activity is supply, how do you know whether an activity is supply or not a supply? For that we need to refer to section 7. We have one section 7, so that we need to refer. So I am just giving you the section reference also. So transaction is supply under section 7. So supply under section 7, 7 of which act? CGST Act, because we don't have IGST Act in syllabus, we don't have UTGST Act, SGST Act, we have only CGST Act. So first you need to check whether the transaction is supply under section 7. If it is no, then not a supply. If it is yes, what is the next thing that you need to see? So whether it will be taxable or not. But before that, one more point also we need to check, is it goods or services? Okay, so supply of goods, is it supply of goods? If it is supply of goods, okay, always taxable, pa, always taxable. Why always taxable? Because we don't have the exemptions with respect to goods. Is it clear? We don't have exemptions with respect to goods in syllabus. For intermediate exam syllabus, we don't have exemptions with respect to goods. We have exemptions only with respect to services. So whenever you see in the list goods, definitely it will be always taxable, always taxable, always taxable, and always taxable under FCM or RCM. What is FCM? Forward charge mechanism. RCM or reverse charge mechanism. That is okay, but meaning FCM means who will pay GST? Supplier will pay GST to government. RCM means who will pay GST to government? Recipient will pay GST to government. Ultimately the burden will be on whom? Recipient only. Suppose I am supplier, you are my recipient. If I pay GST and in turn recover it from you, so then also the burden is on you. And you pay GST directly to government, then also the burden is on you, correct or not? So therefore, let it be FCM or RCM, the burden will be always on the recipient. So always taxable under FCM. So supplier shall pay GST to government. Suppose if it is no, it is not supply of goods, then it is what? Services. For services, we have exemption or taxable. But what is defined? Exemption is defined or taxable is defined? Exemption is defined, means we know what are the list of exemption. So balancing figure is taxable. So you need to check whether such service is exempted. Whether such service is exempted. Whether such service is exempted. If the service is exempted, then what you need to write? Yes, the said activity is supply, however, it is exempted. Okay, you understood? You have to write in the justification the said activity, even though it is supply, but the same is exempted. How do you know whether a service is exempted or not? It will be given in one notification. What is that notification number? 12/2017. Notification number 12/2017 contains the list of services which are exempted. Notification number 12/2017 contains the list of services which are exempted. So you need to write a reference. So that is the said service is exempted. Wide notification number 12/2017, like that. Okay. So it will become exempted supply. It will become exempted supply. Then, so when it is not a supply, whether you need to pay GST? When it is not a supply, are you required to pay GST? No. When it is exempted supply, are you required to pay GST? No. Suppose if it is no, that is whether such service is exempted, no, then it will be, what is the balancing figure? Taxable. When it is taxable, again what is the next thing that you need to check? FCM or RCM. For that, which is given? FCM is given in the law or RCM is given in the law? RCM is given in the law. So whether it is taxable under RCM, whether it is taxable under RCM, whether it is taxable under RCM. If it is yes, who will pay GST? Recipient shall pay GST to government. Recipient shall pay GST to government. What if recipient is unregistered? Impossible, because every recipient who is liable to pay GST under RCM is compulsorily required to get registered. Is it clear or not? Every recipient who is liable to pay GST under RCM is compulsorily required to get registered, irrespective of threshold limit. Means they need to register and they need to pay GST. Then suppose if it is no, whether it is taxable under RCM, no, then it will be FCM. So who will pay GST? Supplier shall pay GST. Supplier shall pay GST to government. Supplier shall pay GST to government only when they are registered. If registered. If registered. What if they are not registered? No GST. First we need to know whether the transaction is under FCM or RCM. If it is FCM, supplier will pay. If it is RCM, recipient will pay. If it is FCM, supplier will pay. What if supplier is not registered? No GST. Is it clear or not? Don't write recipient will pay. No, supplier will not pay. Even though supplier is having liability to pay, but they are not registered. When they are not registered, they are not required to pay GST. Is it clear or not? Then supplier shall pay GST to government if registered. Then what about here recipient? Recipient shall pay GST to government Here, why I have not written if registered? Because there is compulsory registration. Compulsory registration. So you know that service is taxable and you know that it will be covered under FCM, but actually supplier is unregistered because their aggregate turnover does not exceed the threshold limit for registration. Means are they required to pay GST? No, they are not required to pay GST. But what you need to write in exam? You need to write in exam that it is exempted? No, you have to write it as taxable even though supplier is liable to pay, but the said supplier is unregistered or not registered, hence GST not payable by the supplier. Are you understanding this? Then, so that is with respect to this checklist you need to keep in mind, and therefore all services are covered under GST, few are exempted and remaining are taxable. Now, we are moving on to the next area, that is input tax credit in GST. So, what is input tax credit? Means tax paid on inward supply. What is input tax credit? Tax paid on inward supply. What we can do with that input tax credit? We can take it as credit and adjust against what? Tax payable on outward supply. Inward supply means purchases. Outward supply means sales. So, on sales we need to pay tax called as output tax. Got it? And on purchases we need to pay tax called as input tax. So, what is the net GST payable? Output tax minus input tax. Again I am repeating, outward supply, sales means outward supply. On outward supply the tax payable is known as output tax. On inward supply the tax payable is known as input tax. So, net GST payable equals to output tax minus input tax. Clear? So, therefore, this input tax is only called as input tax credit. So, what we are doing? Tax paid on inward supply we are taking as credit and adjusting against the tax payable on outward supply. Now, this taking credit should not be called as taking credit like that in exam. In exam you should write it as availment of ITC. This taking credit is known as what? Availment of ITC. Then this set off of credit or adjustment of credit is known as utilization of ITC. So, see there, availment of credit and utilization of credit. What is the meaning of availment of credit? Taking credit. Then utilization of credit means adjusting credit or set off of credit with the liability. Now, where this availment of credit and utilization of credit will happen? In one form. Which form? GSTR 3B. So, GSTR 3B, this availment of ITC, utilization of ITC, all these things will happen in GSTR 3B. What is GSTR means? GST return. GST return. So, this GST return is to be filed by every registered person. So, in the GST return, they need to avail the ITC and they need to utilize the ITC. Even one more terminology is also there called as reversal of ITC. What is reversal of ITC means? Reducing the ITC. Okay. So, what are the three terms you need to remember when it comes to ITC? First, availment of ITC. Availment of ITC means taking credit. Number two, reversal of ITC, reducing the credit, and utilization of ITC, set off or adjustment with the liability. So, whenever you are writing about decrease in ITC, etc. and all, use the word reversal of ITC. Whenever you are writing about set off of ITC, etc., so use the word utilization of credit. Now, let us see a simple example to understand. There is a trader and this trader is having some outward supplies, and inward supplies. This trader is having some outward supplies and inward supplies. So, on these outward supplies, say 10,000 rupees plus 1,800 is taken as liability. Then on inward supplies, so 5,000 rupees plus 1,200 is the GST. Now, in that case, this 1,200 is known as what? Input tax credit. Okay. Then what is this 1800 called as? Output tax. Output tax, or in other words, gross liability. Okay. Output tax or gross liability. So how much we collect from our customer? 10,000 or 11,800 or 10,600. Why 10,600? Because how much I need to pay to government? 1,800 minus 1,200. So therefore 600 rupees I need to pay. So therefore whether I will collect 10,600 or 11,800. So therefore what is the journal entry for this sales? Sales. Journal entry for this sales. Bank account debit 11,800. 11,800 to sales 10,000. To GST payable 1,800. So GST payable, so bank account debit 11,800 to sales 10,000. இப்போ நான் ஏதோ ஒரு ஃபோட்டோ எடுக்க சொன்னேன், அந்த அவ்வளோதான். அவர் விழுந்து எடுக்கிறாரு. Bank account 11,800, sales 10,000, GST payable. So we are recognizing a liability of 1,800. Then for this purchases, what is the entry? Purchase account debit. Purchases account debit. So 5,000. 5,000. Okay. Then this GST paid on purchase will be called as one name, input tax credit. So input tax credit will show a debit balance. So ITC account debit 1,200 to bank, that is 6,200. So this 1,200 we are creating as a asset. So that is input tax credit. So now we do the set off. So therefore 1,800 minus 1,200, the remaining amount we need to pay by cash. Okay. So what is that amount we need to pay by cash? So GST payable account debit, GST payable account debit 1,800 to input tax credit account 1,200 to bank 600, to bank account 600. So now this is what generally it happens, that is net GST payable equals to gross GST. What is the gross GST? 1,800 minus input tax credit. What is input tax credit? 1,200. So 1,200, therefore the net GST will be 600. So this 600 rupees is only this bank. You understood or not? And how practically it will work? This is theoretically. How practically it will happen? So there are 3 ledgers maintained by GST network on behalf of every registered person. What are those 3 ledgers? Electronic liability ledger, electronic credit ledger, and electronic cash ledger. The liability will be paid through electronic credit ledger as well as electronic cash ledger. How much liability will be reported in electronic liability ledger? In this case 1,800. How that will come in 1,800 in electronic liability ledger? We will file one return called as GSTR1 and GSTR3B. So based on our GSTR1 and GSTR3B, in liability ledger 1,800 will be shown as liability. Is it clear? GSTR1 is a return containing the details of outward supply. GSTR3B is a consolidated return that contains the details of all inward supplies and outward supplies. So now in the GSTR1, GSTR3B, we report some liability. So whatever we report as liability, that will only be coming into electronic liability ledger. Got it? Then this liability can be paid through credit ledger as well as cash ledger. Here, how much will be paid through credit ledger? 1,200. How that 1,200 will come into this electronic credit ledger? We will avail it as ITC. Where we will avail it as ITC? In GSTR3B. You understood? In GSTR3B, we will mention some amount as ITC. So that will be coming under electronic credit ledger. So then the balance 600 rupees has to be paid through electronic cash ledger. So whether this payment is separately after filing 3B or at the time of filing 3B? At the time of filing 3B. So we cannot file 3B and then pay the tax, impossible. So at the time of filing 3B itself, we make the payment of tax. So that is this. All these things will happen in GSTR 3B. Now, whatever ITC that you are availing in GSTR 3B, that only comes in electronic credit ledger. Can I enter any number which I like? Can I enter any number which I like here? Input tax credit? No. Whatever I have purchased and that is reflected in GSTR 2B, that only I can take as ITC. Now there is one more return that came into picture. What is that? GSTR 2B. What is GSTR 2B? Say this. Now there is a recipient, Mr. A. There is a recipient, Mr. A, who is making purchases from Mr. X, Mr. Y and Mr. Z. So these three people are making sales to Mr. A, and they will prepare one invoice and they will be giving it to Mr. A, and they will be filing GSTR 1. Who will be filing GSTR 1? Mr. XYZ, that is the purchaser, that is supplier of Mr. A. Suppliers of Mr. A will be filing GSTR 1, and whatever details that is reported in GSTR 1 filed by the supplier will be added and will be made available to the recipient in GSTR 2B. So now Mr. X is selling to Mr. A for 10,000 plus 1,200 GST. Mr. Y is selling to Mr. A for 5,000 plus 600 rupees GST. Mr. Z is selling to Mr. A for 10,000 plus 1,800 as GST. So now how much is the ITC as per the books for Mr. A? What is the ITC as per books for Mr. A? 1,200 plus 600 plus 1,800. So what is the ITC as per books? ITC as per books. ITC as per books is 3,600. Now, if you see X has filed GSTR 1 10,000 plus 1,200. Y did not file GSTR 1 by the due date. Why did not file GSTR 1 by the due date? Why he did not file? So maybe some problem he has. So that is not our botheration. So he has not filed. Okay. Then Z has filed GSTR 1, but he reported lesser amount. So that is 10,000 plus 1,200 he reported. Then how much will be reflected in the 2B of Mr. A? So who will generate 2B? Who will generate 2B? Portal will generate 2B. So that is GSTR 1 filed by X will give the details of Mr. A. X will give the detail of Mr. A while filing GSTR 1. Y also will file GSTR 1 and give the detail of Mr. A. Z also will file GSTR 1 and give detail of Mr. A. Now the portal will understand, okay, A has made purchases from these three people. So therefore, the sum of these three, what is the sum of these three? 2,400 will be, taken in GSTR 2B and will be made available to the recipient Mr. A in GSTR 2B. And who will be giving this data? Portal, GST portal, GST network will be giving. So therefore, what is the ITC as per 2B? What is the ITC as per GSTR 2B? 2,400. How much credit I can take in 3B? That is, I am Mr. A. How much I can take as credit in my 3B? 3,600 or 2,400? 2,400. So ITC availed in 3B. ITC availed in GSTR 3B is 2,400. So now you tell me, based on this discussion, what availment of ITC, how much ITC we can avail? Only those ITC which is reflected in GSTR 2B. How much ITC we can avail in 3B? Come on. Only those ITC which is reflected in 2B, GSTR 2B. From where GSTR 2B will come the information? From the GSTR 1 of the supplier. So from the GSTR1 of the supplier, the data will be made available in GSTR2B of the recipient. Whatever is there in 2B of the recipient, that much only can be taken as ITC in 3B by the recipient. Understood or not? Then that is with respect to this availment of ITC. And in exam, what you need to do is that you need to check out this information. Definitely this attempt, so even last attempt also they asked, so definitely it will be tested. So they will give all ITCs, but they will say out of these invoices, 2 invoices, details are not reflected in 2B, which means for those 2 invoices related ITC you should not take. You understood or not? And last time one beautiful point has been given. So that is e-invoice. A person to whom e-invoice is applicable, not given e-invoice. If you buy from such person, even though you have invoice, you cannot avail ITC. So that point has been tested in the last exam. So therefore ITC related points will definitely be tested. So that's why I just told you is now itself. So what ITC can be taken in GSTR 3B? Only those ITCs which are reflected in GSTR 2B. So GSTR 2B of the recipient will contain the data based on GSTR 1 of the supplier. Now on import we pay basic customs duty, social welfare surcharge and IGST, because CVD and SAD got subsumed into GST na. So then in the place of CVD SAD there is something called as IGST. Can that IGST also be taken as credit? Yes. IGST also be taken as credit. IGST paid on import also be taken as credit. Then 2 important points. If my outward supply is exempted, can I take ITC on my inward supply? If my outward supply is exempt, my sales is exempted, can I take ITC on my inward supply? No. If my outward supply is taxable, can I take ITC on my inward supply? Yes. Say this, if outward supplies are taxable, ITC available with respect to inward supply. If outward supplies are exempted, ITC not available with respect to inward supplies. Then what if my outward supply is 0 rated? Can I take ITC on inward supply? For that we need to understand what is 0 rated. There are 2 supplies which are considered as 0 rated supplies. What are they? Export of goods or services, supply of goods or services to SEZ is known as 0 rated supplies. So once again, what are 0 rated supplies? Export of goods or services, supply of goods or services to SEZ, special economic zone, is known as 0 rated supplies. Why is it called as 0 rated? Please concentrate. On my purchases, I will take ITC, and I have 2 options. Option number 1, on my sales, I will pay IGST. How I will pay IGST? Using my ITC, using my input tax credit. I will pay IGST, and whatever IGST I paid, I will get it as a refund. For example, on purchases I have ITC 15,000 pa. On sales I have to pay GST of 25,000. So what I will do, 25,000 minus 15,000. So remaining 10,000 I will pay by cash. Now how much refund I will be getting? On purchases I paid 15,000. On sales I am paying 10,000. How much refund I will be getting? 25,000 I will get as refund. So for example, you see this. So one illustration is there below. Have a look into that illustration. Inputs, input services and capital goods are purchased by ABC Private Limited, an exporter. And the value of inputs is 1 lakh excluding GST at 12%. Value of input services is 50,000 excluding GST at 18%, and capital goods is 1,50,000 excluding GST at 12%. Using these 3, the person has made export of finished goods. What is the value of finished goods exported? 8 lakhs excluding GST at 12%. You understood this question? Question you understood? Clear or not? What is the export value? 8 lakhs. How that exports are made? Using 3. What are they? Inputs, input services, capital goods. Okay. And on inputs, how much they paid as tax? 12%. Means 1 lakh into 12%, 12,000. Okay. On input services, how much they paid as tax? 18% of 15,000. 50,000, that is 9,000. Then on capital goods, how much they paid as tax? 1,50,000 into 12%, that is 18,000. this much they paid, and they are making export of goods excluding GST at 12%. Now, is this export zero rated supply for them? Yes. What are zero rated supplies? Export of goods or services, supply of goods or services to SEZ is known as zero rated supplies. Now, in this case of zero rated supplies, please read above option number 1. Read option number 1. So, on outward supply, are they paying GST or they will not pay GST? So, they will not pay GST and they will avail ITC. And will they utilize the ITC? No, there is no utilization of ITC because they will not pay GST on outward supply and they will get the refund of ITC availed. Okay. Now, we will apply this and we will see. And what is the second option? Another option, pay IGST and avail ITC and they will get refund of gross IGST. Okay. So, just slight change. So, this option 2 I am changing as option 1 and option 1 I am changing as option 2. So, option number 1 is export upon payment of IGST and I will get refund of IGST. So, there are two options. What are the two options? Pay IGST and get refund, or another option, don't pay IGST and get refund of ITC. Now, first option we are solving, carefully listen. First, on this first option, whether I pay IGST? Yes. How much is the IGST on sales? Please take your calculator. 8 lakhs into 12%. What is 8 lakhs into 12%? 96,000. So, I have to pay 96,000. How I will pay 96,000? By using my input tax credit. What is the input tax credit that I have? Just now you only told me we have 12,000 rupees plus 9,000 rupees plus 18,000 rupees. So, total 39,000 rupees we have as input tax credit. What is our sales GST? 96,000. 96,000 minus 39,000. So, what is the difference? So, 57,000 I will pay GST. How much I will get as refund? So, not 39, not 57, I will get 96,000. How? Simple pa. On purchase, how much I paid? 39. On sales, how much I am paying out of pocket? So, what is the sum of these two? That 96,000 we will get. So, on purchases, whatever I paid also I got as refund. On sales, whatever I am paying also I am getting as refund. So, which means the total burden will be 0. That's why it is called as zero rated supplies. Is it clear? On purchases, I am paying 39,000, which I am getting as refund. On sales, I am paying 57, that also I will get as refund. So, which means total refund is 96,000. So, the burden on me will be 0. That's why it is known as zero rated supplies. Understood? Then next. So, another option is export without payment of IGST under bond or letter of undertaking, means I will not pay GST. So, therefore, on this exports will I pay any GST? No. But on purchase already I paid, correct? On export I will not pay GST, but on purchases I already paid na 39,000 rupees. In that 39,000 rupees for inputs and input services. What is inputs and input services? 12,000 and 9,000. So, GST paid on inputs and input services 12,000 and 9,000. That 12,000 and 9,000 I will be getting as refund. What is 12,000 and 9,000? 21,000 I will get as refund. But still, how much is there? GST paid on purchases, capital goods 18,000. That 18,000 I can avail as ITC and adjust with my liability in future. So, which means now also the burden became 0. On sales, no tax pa. On purchases, whatever I paid, partly I got as a refund, and remaining amount I am taking as credit, which I will adjust against the future liability. Now also the burden is 0. So, therefore, zero rated supplies means two options are available. Either they will pay IGST and get refund of that IGST, or they will not pay GST and get refund of ITC. Now, which option is preferable according to you? Option 1 or option 2? Option 1. Why option 1 is preferable? full amount you are getting as refund, correct? On option 2, why it is not preferable? Because only part amount you are getting as refund, remaining is still in the form of ITC, correct? But option 1 has got a small disadvantage compared to option 2. What is that? Can you find and tell me? In case of option 2, I have to pay that 57,000 and get it as refund. So which means time value of money is involved, correct? First I will pay 57,000. I need to wait for some days and then I will be getting that 57,000. On option 2, we don't have that now. In option 2, we are not paying any GST on outward supply. Whatever we paid on inward supply only we are getting. So therefore, people will decide. If they don't have any money available for payment of tax, they will go for option 2. If it's okay, they have money, so definitely they will go for option 1. Also, if I have more credit on capital goods, I should go for which option? More credit on capital goods. I should go for which option? Option 1 or option 2 or option 1? Because in option 1 I will get the full refund of capital goods, but in option 2 I will not get the refund with respect to capital goods. What is capital goods? Capital goods means any goods which are purchased and capitalized in the books of the purchaser is known as capital goods. Is it clear? What is capital goods? Any goods purchased and capitalized in the books of the recipient, that is who is purchasing, is known as capital goods. Suppose if it is charged to P&L, then it will be called as inputs. What is the difference between inputs and capital goods? If you want, you write down somewhere. Goods purchased and charged to P&L is known as inputs. Goods purchased and charged to P&L. Goods purchased and charged to P&L is known as inputs. Goods purchased and charged to P&L is known as inputs. Goods purchased and capitalized. Goods purchased and capitalized is known as capital goods. Goods purchased and capitalized is known as capital goods. Okay. So this is an untapped area. So definitely they can ask question on this. Zero rated supply. That's why I have given one illustration. Okay. Then next one, GST Council. So in GST, who will take the decision? Central government or state government or both? Both, because GST is what type of GST? Single or dual? Dual. So which means both central government and state government should take the decision. For that reason, we have one council called as GST Council. So this GST Council, is it a constitutional authority or a government body? It's a constitutional authority and it derives the powers from which article of the Constitution? Underline Article 279A of the Constitution. Article 279A of the Constitution empowers GST Council and it is a constitutional authority, not a government body. And who will be creating this GST Council? President of India. President of India will constitute this council. And who are the members of this council? Total 33 members are there. Total 33 members. One union finance minister. For central government, one finance minister is there, na? One union finance minister. How many state governments are there? 31 state governments. How 31 state governments? 28 states plus 3 union territories which are treated as state governments. So therefore 31 state finance ministers. So one union finance minister, 31 state finance ministers plus one union MP in charge of the revenue for 5 union territories. These 5 union territories without state legislature is there, na? Ladakh, Daman, Diu, etc. For those 5 union territories, one union MP is appointed to look after the finance. So that person. So therefore total 33 members. So how 33 members? One union finance minister, 31 state finance minister and one union MP in charge of revenue for 5 union territories. And out of these 33 members, in order to become a valid meeting, what is the quorum that should be present? So what is the quorum pa? 50%. 50% means how many members should be present? 17 members. 33, 50% is 16.5. So 17 members should be present in the meeting, then it will be called as a valid meeting. Then here, what is the weighted votes? That is, central government vote is having 1/3 weight and state government vote is having 2/3 weight. And what is the weighted majority that is required? 3/4 of the weighted majority means how many votes should be in favor? 75%. 3/4 means more than 75%. That too, so central government one vote will not be counted as 1. So it will be counted as 1/3. And state government one vote will not be counted as 1. It will be counted as into 2/3. So like that we need to take the weighted votes, and if the weighted votes is more than 3/4, then the decision is to be taken. For example, say this. So total number of votes in favor, 1 central government vote and 18 state government votes, and then total votes if you see, so 2 central government votes, total votes, and we have some 25 state government votes. So now, what is the weighted votes? Central government vote will have 1/3 weight, state government vote will have 2/3 weight. So what is the total of this? 1 into 1/3, 18 into 2/3, 18 into 2, 36, 36 plus 1, correct? 37, 37 divided by 3. Then here, so how 2 central government votes? How 2 central government votes pa? So 1 union finance minister, 1 union MP of the state, that is a union MP in charge of the revenue for 5 union territories. So therefore 2 into 1/3 plus 25 into 2/3. What is the total? So 2 into 1/3, 2/3. 25 into 2/3, 50. So 52 divided by 3. Correct? Now, what is the majority? Please check whether the majority is satisfied. 37/3 divided by 52/3. 3 you ignore. 37 divided by 52. 37 divided by 52. Is it more than 75% or less than or equals to 75%? 37 divided by 52 into 100, how much percentage? So it is less than. So due to that reason, whether the decision will be taken or will not be taken. So that is the meaning of 3/4 weighted votes that should be there. Is it clear? Then who will be the chairman of GST Council? Union Finance Minister. And GST Council will basically do decision making, and they give recommendations on what issues. They give recommendations on what issues: change in rates, exemptions, compliance, like what are the returns to be filed and when which return needs to be filed, etc. So they give recommendations to central government and state government. Mark it as important for theory. GST Council directly can be asked. So write a brief note on GST Council. These are the points that you need to write. So tell me what are the points that you need to write. First, GST Council is a constitutional authority and it derives the power from Article 279A of the Constitution, and then it contains 33 members. And who are those 33 members? 1 Union Finance Minister, 31 State Finance Minister, and 1 Union MP in charge of the revenue for Union territories. And then who is the chairman of the council? Union Finance Minister. Who constitutes this council? President will constitute the council. And what is the quorum for having a valid meeting? 50%. And what is the central government vote weight? 1/3. State government vote? 2/3. And what is the majority, weighted majority that is required? 3/4 weighted majority required. So these points, if you read, that is enough. Then other points to remember: which is the first country to implement GST in the world? France. And India so implemented GST on account of the recommendations of Dr. Kelkar task force, and the effective date of implementation of GST in India is 1/7/2017. Then there is something called as GST network. GST network is the common portal, GST common portal. So GST network is a 100% government owned entity, but in that 50% is owned by central government, remaining 50% is owned by all state governments together, and this GST network will provide information technology infrastructure for the purpose of implementation of GST. So they will be providing services to central government, state government and taxpayers. And say this GST network provides information technology infrastructure. To whom they will provide? Central government, state government, union territory and other stakeholders for implementation of GST. So it is a government entity, 100% government owned entity, and central government owns 50% and all state governments owns 50%. What are the functions of GST network? You just write down there. What are the functions of GST network? Registration. If you want to do registration, the registration under GST can be done only through GST network. Then returns, filing of returns, payment of tax, then e-invoice, e-way bill, then claiming refunds. These are the functions of GST network, etc. Okay, claiming refunds, registration, returns, payment of tax, e-invoice, e-way bill, claiming refunds, etc. These are the functions of GST network. So with this we completed majorly. There is one more area, that is IGST settlement. So this IGST settlement, so see this, can we utilize IGST credit for payment of SGST liability? Yes, we can utilize IGST credit for payment of SGST liability. So before that, let's try to understand the matrix of utilization of credit. On my inward supplies, no need to write, just listen. On my inward supplies, I have CGST credit and then SGST credit, then UTGST credit and IGST credit. Then on my outward supplies, I have liability. What are those liabilities? CGST payable, then SGST payable, UTGST payable, and then IGST payable. Can I use CGST credit for payment of CGST payable? Yes, we can use CGST credit for payment of CGST payable. CGST credit for payment of SGST payable? No. CGST credit for payment of UTGST? No. CGST credit for payment of IGST? Yes. Same way, SGST credit cannot be utilized for payment of CGST and UTGST, but it can be utilized for payment of SGST, and it can also be utilized for payment of IGST. Same way, UTGST credit cannot be utilized for payment of CGST and SGST. It can be utilized for payment of UTGST and IGST. Then IGST credit can be utilized for payment of all liabilities: CGST payable, SGST payable, UTGST payable and IGST payable. Clear? Now in this case, so what are the 2 points you need to remember from this table? Point number 1, there is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Okay, then with respect to the other 3, respective credit can be utilized for payment of respective liability. Now here, when IGST credit is set off with SGST liability, can IGST credit be set off with SGST liability? Yes, no restriction. Same way, SGST credit be set off with IGST liability? Yes, no restriction. But when you do this settlement, so one government has to pay the amount to the other government. that is known as IGST settlement. How that will work out? See this. So my purchases is interstate. Interstate means what GST I would have paid? IGST I would have paid. My outward supply is intrastate, means what GST I will be paying? CGST and SGST. Now, so IGST 20,000, I am utilizing 10,000 for payment of CGST and 10,000 for payment of SGST. Now, this IGST credit is with which government? Central government. This CGST payable to which government? Central government. So there is no settlement. Why no settlement? I have to get some money from you. I have to give some money to you. Whether any settlement required, we can set off, correct? Physically, whether I have to give you any money and take money from you, no. We can set off. You are my debtor, pa. You are only my creditor. So whether any movement of cash is required, no. We can do the account transfer and we can settle, correct or not? We can set off. So same central government need to give us 20,000 and we need to pay to the central government 10,000. So mere set off is sufficient, no need of any settlement. And IGST central government, SGST payable to state government, when you do the set off, so now central government has to pay that to the state government. For example, you are my debtor, you are my creditor. I am telling you can set off, okay? Then I came out of the transaction, but the debtor has to pay the money to the creditor, correct or not? Are you understanding this? For one person is my debtor, another person is my creditor, then the debtor has to make that payment to the creditor, na? Like that, which government has to pay how much amount to which government? Central government should pay 10,000. How much we are setting off for SGST liability? 10,000. So central government should pay 10,000 rupees to state government under IGST settlement. Clear? Then this case, another example. Inward supply is intrastate. So CGST paid 10,000, SGST paid 10,000. Utilizing this CGST, SGST for payment of IGST 25,000. Now this CGST paid is with which government? Central government. This SGST paid is to which government? State government. Now when we are utilizing it for payment of IGST, so then when 10,000 rupees is utilized for payment of 25,000 rupees, so both are central government only, no need of any settlement. When this 10,000 is utilized for payment of 25,000, this is with which government? This is payable to which government? So therefore, state government should pay 10,000 rupees to central government under IGST settlement. So IGST settlement comes in two situations. What are those two situations? SGST credit utilized for payment of IGST liability. IGST credit utilized for payment of SGST liability. Can you please repeat when IGST settlement will be applicable? Come on. SGST credit is utilized for payment of IGST liability, or IGST credit utilized for payment of SGST liability. Now which government will pay to which government? When SGST credit is utilized for IGST, which one we are utilizing? State. So state government has to pay that money to central government. When IGST credit is utilized for SGST liability, which one we are utilizing? Central government. So central government has to pay that money to the state government. Understood? So this also can be asked as a theory question, IGST settlement, or in MCQ also it can be tested. And first we have this information, difference between direct and indirect taxes. So that is simple, you know already. What is the difference between direct and indirect taxes? First, direct tax, who will pay? The person who earns the income. Can he transfer it to next person? No. But in case of indirect taxes, can he transfer it to the next person? Yes. So therefore, the person paying the tax directly bears the incidence of tax. But indirect tax, the person paying the tax collects the same from the ultimate consumer. And nature, direct tax is progressive in nature. Higher the income, more income tax. Whereas indirect tax is regressive in nature. Means whether you are earning more income or less income, every person has to pay the same amount. And tax burden, who will have the tax burden in case of income tax? The person who is paying. But here it can be shifted to another person. Example, income tax, GST, customs duty, etc. And So this is just how GST has traveled and the implementation of GST. Already I discussed that with you. 3 years you need to remember: 2014 bill, 2016 act, Constitution Amendment Act, 2017 effective date of implementation of GST. Okay, and with this we completed segment 1, introduction to GST. So in that the major important areas are the zero rated supplies, not yet tested in exam, and even this IGST settlement also not yet tested in exam, that can be asked. And you can see the practice manual discussion related to this. So please take practice manual. In that practice manual, first I have given the November 22 suggested answer, and then you can see page number 20. Page number 20. After this we will take break. Okay, so listen. Page number 20, segment 1, introduction to GST. Look into this MCQ. Various taxes have been subsumed in GST to make one nation, one tax, one market for consumers. Out of the following, determine which taxes have been subsumed into GST. Whether basic customs duty got subsumed into GST? No. Customs duty is outside the ambit of GST, not subsumed. Taxes on lotteries, betting, gambling, yes, this got subsumed into GST. Entertainment tax also got subsumed into GST. So therefore 2 and 3 is the answer. So option C, 2 and 3 is the answer. Then alcoholic liquor for human consumption is subject to, what are the existing indirect taxes on alcoholic liquor for human consumption? State excise duty, central sales tax and value added tax. So option C, both A and B. Then difference between direct and indirect tax, already we discussed. Enumerate major direct and indirect taxes. Major direct tax is only income tax, and major indirect taxes is goods and services tax and customs duty. I included even ICA study material question also. So which means you don't have to refer to study material also. All ICA SM questions I have included, and I am discussing that as per the updated provisions only. Then write a short note on various lists provided under 7th schedule to the Constitution. As per 7th schedule to the Constitution, we have 3 lists: union list, state list and concurrent list. Union list means where central government is having power to make law. State list means where state government is having power to make law. Concurrent list means both central government and state government is having power to make law. So that is this 3 list. And 7th schedule to article 246 of the Constitution. Then discuss dual GST model as introduced in India. So India has adopted dual GST model where both central and state simultaneously levy GST on the taxable supply. And so GST extends to whole of India, including the state of Jammu and Kashmir. These points we need to write. Discuss the functions of common portal, common GST portal. First we need to write about GST portal. So GST portal or GST network, so they will provide what? Information technology infrastructure. To whom they will provide information technology infrastructure? For central government, state government and taxpayers for the purpose of implementation of GST. And so GST being destination based tax, the interstate trade of goods and services needed a robust settlement mechanism amongst the center and state. So because IGST settlement also who will do? GST network only will do. So as SGST credit is set off with IGST liability, IGST credit is set off with SGST liability. So central has to pay that amount to state, state has to pay that amount to center. So this settlement is done by the GST network. And a common portal was needed which could act as a clearing house and verify the claims and inform the respective governments. So this is possible with the help of a IT infrastructure. Resultantly, they have created GST common portal, also known as GST network. And is it a entity? Yes, it's an entity under section 8 of the Companies Act. And They provide shared information technology infrastructure between center and state and the taxpayers. What are the functions of GST network? Already we have discussed. They will facilitate registration, then forwarding returns, computation and settlement of IGST, matching the tax payment with banks, providing MIS reports. MIS reports means management information system reports to central and state governments, etc. Then GST is a simplified tax structure. Justify the statement. So this is a generic question. Why GST is a simplified tax structure? Because previously we have multiplicity of taxes, but now in GST there is a reduction in multiplicity of taxes. Underline that. See, these keywords you need to write, not necessary that you need to write ditto the same way. So the keywords when you are writing, even while evaluation, they will see whether these keywords are present in the answer. If it is there, you will get full marks, okay. So reduction in multiplicity of taxes and uniformity in tax structure. Why uniformity in tax structure? Previously, so different states used to have different rates for same product. So if you take one product in Tamil Nadu one rate and Andhra Pradesh one rate, like that different rates used to be there. But now everywhere the rate will be same, uniformity in tax structure. And even uniformity in the law, procedure and tax rates across the country. So even procedure and law also same, because GST procedure is going to be common. Let it be in Tamil Nadu or in Jammu and Kashmir, there is no difference in that. Then common system for classification of goods and services across the country. Previously we had this dispute, that is supply of food, whether it is treated as supply of goods or supply of services. In some states it was treated as supply of service, in some states it was treated as supply of goods, in some states it was treated as both supply of goods and service. They used to levy both value added tax and service tax, but that problem is not there now. So system, uniformity in the system of classification across the country, and because of this, GST is a simplified tax structure. What are the 3 points that you need to remember? Reduction in multiplicity of taxes, uniformity in tax structure, laws and procedures, and common system of classification of goods and service across the country. Then what are the advantages that GST accrues to the trade and industry? So benefits of GST to the industry is that, so because of subsuming multiple indirect taxes, so it will lead to lowering of tax burden on an average dealer. So there is a reduction in tax burden compared to previous indirect tax law. In GST, so the burden for the dealer will come down, because lot of multiple taxes got subsumed into a single tax due to that reason. And so ill effects of cascading. So mitigation of ill effects of cascading, which means cascading effect of tax means tax on tax. We used to pay tax on excise duty, we used to add sales tax, but now that is not there. So that cascading effect of tax is eliminated. So first point you need to remember that there is reduction in tax burden to the dealers. Number 2, it eliminates the cascading effect of taxes. And so even for small businesses, there are some benefits like composition scheme. Small businesses, so composition scheme and increased threshold limit for GST registration, because in earlier indirect taxes the GST the tax threshold limit for registration was 10 lakhs, but that has been increased to 20 lakhs in GST. So therefore for small traders, they are not required to pay GST because there is a higher threshold limit, and even they can go for composition scheme, okay. So these are the points that we need to write if you get a question on advantages of GST. Then list the special category states as prescribed in Article 279A of the Constitution. So as per Constitution, what are the special category states? Remember MMTN. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. Then Assam. A for Assam, yes Sikkim, A Arunachal Pradesh, Meghalaya. Then Himachal Pradesh and Uttarakhand. Okay, Himachal Pradesh, Uttarakhand and Jammu and Kashmir. So these are the special category states. So total we have, so these 7, so MMTN, Manipur, Mizoram, Tripura, Nagaland, then Assam, Sikkim, Arunachal Pradesh, Meghalaya, and then Himachal Pradesh, Uttarakhand and Jammu and Kashmir. So these are the states which are treated as special category states, okay, for the purpose of constitution, not for the purpose of GST, for the purpose of constitution. Then discuss the leviability of GST or otherwise on tobacco. So tobacco, what is the GST implication on tobacco? Whether GST is payable on tobacco products? Yes. But not only that, even central excise duty is payable on tobacco products, and it is covered under the ambit of GST as well as old indirect taxes. Then list any 6 state levies which are subsumed in GST. Whatever is there is only 6, okay, not any 6. So whatever we have is only 6. So what are those 6 state levies? Value added tax, purchase tax, entertainment tax, luxury tax, advertisement tax and betting tax. Then list any 4 central excise central levies which are subsumed in GST. Central excise duty, service tax, central sales tax, then CVD, countervailing duty and special additional duty. So that's it. These are the questions which are asked on introduction. So we'll take a small break for 10 minutes and thereafter we will continue with a very important area, supply, composite supply and mixed supply. Okay. So upon students' request that IGST settlement concept, once again I am repeating. See, IGST settlement is simple. First I paid IGST to my supplier. He paid it to central government. Now that money is with central government. Now I have to pay SGST to my state government. So when I set off this, central government has to pay that money to state government. That's it. Same way, when I have SGST credit, means what? I paid the money to my supplier who paid it to state government. Now the money is with state government. Now when I am setting that off with central government liability, so state government has to pay that money to the central government. Okay. Then CGST credit, won't it be set off with IGST liability? Yes, but there is no problem because both are same government only. Only when there is different government, then only this IGST settlement concept will be coming into picture. Then entertainment tax is levied by both state government as well as local authority. But state government levy of entertainment tax got subsumed into GST, but local authority levy of entertainment tax not got subsumed into GST. Is it clear? Fine. Settle down soon. We'll start with supply. Second segment, segment number 2. Okay. Supply is defined under section 7 of CGST Act. So supply is defined under which section here? Section 7 of CGST Act. In that supply, we need to remember 3 subsections. 7 subsection 1 deals with inclusions, 7 subsection 2 deals with exclusions, and then 7 subsection 1A is classification of supply into goods or services. So in section 7 there are 3 subsections, 7 subsection 1 inclusions, 7 subsection 2 exclusions, 7 subsection 1 capital A classification of supply into goods or services. There is one more subsection 7 subsection 3, but that is practically irrelevant now. That is, central government is empowered to reclassify supply of goods or supply of service and vice versa, but that is practically irrelevant now because we don't have any notification under 7 subsection 3. So you need to remember, for exam point of view, only 3 subsections, that is 7.1 inclusion, 7 subsection 2 exclusion, 7 subsection 1A classification of supply into goods or services. In that, we are starting with 7 subsection 1 inclusions in the meaning of supply. What are included? You can see there 7 subsection 1 capital 7.1A 71AA, 71B and 71C. These are the 4 inclusions. 71A says any activity for a consideration whether or not in the course or furtherance of business, or it should be in the course or furtherance of business. It should be in the course or furtherance of business, and from whose point of view we need to see? Supplier point of view. Let it be goods or services. For example, there is one trader who is selling goods. So trader selling goods will be any activity. When he is selling goods, he is getting some consideration, and he being a trader, that is in the course or furtherance of business. Therefore, it is supply under 71A. Now you have one old mobile. That old mobile you sold in OLX. Will it become supply under 71A? You have an old mobile. That old mobile you sold in OLX. Will it become supply under 71A? First, is it an activity? Yes. Activity is sale. Sale. And is it for consideration? Yes. But is it in the course or furtherance of business? No. So therefore, it is not a supply under 71A. Understood? One more example. Say you have some old newspapers at your house. So that old newspapers, so you have bundled it and you have sold it to a newspaper mart, old newspaper mart, and you got some 200, 300 rupees. So whether that will become supply under 71A, activity, sale. For consideration, yes. Is it in the course or furtherance of business? No. Suppose if old newspaper sales itself is your business, then it will become supply under 71A. Same way, selling mobiles itself is your business, then the previous example will become supply under 71A. So what are the 3 conditions? First, there should be an activity. First, there should be an activity. That activity should be for consideration, and it should be in the course or furtherance of business. If these 3 things satisfied, then it will become supply. And that activity can be any activity, not that this sale only will be coming under activity. It can be sale, transfer, barter, exchange, rental, lease, license, any kind of activity. So should it be involving only goods or services? Goods or services. Then what is the difference between 71A and 71AA? 71AA is any activity between a person other than individual and its members. So this 71AA is an amendment not for May 23, it was an amendment for November exam itself, and this point not much tested. So therefore, there is a possibility of asking questions on 71AA, that is, there is a person other than individual. Who is person generally? Individual, HUF, AOP, BOI, firm, LLP, company, body corporate, etc. That is person. Person other than individual and its members. So HUF and its members, firm and its partners, company and its shareholders. Between them, if there is any transaction, so that transaction will become supply under 71AA. For example, there is a club or an association. That club or association providing facilities to their members, and they collected some maintenance charges from the members or subscription charges from the members. Will it become supply under 71A? No, it will not become supply under 71A, because the club and members are one and the same, correct? Whether the club is having any separate incorporation, no, the club and members are one and the same. So even then it will become supply under 71AA. One more example, there is a partnership firm and there is a partner who is working as a partner in that partnership firm and getting salary. Salary is not a supply. Why salary is not a supply? Because withdrawal of profit. So he invested in the business and he is taking as remuneration or salary, that is not a supply. However, that partner will be providing some services to the firm for which the firm will pay some money to the partner. So then it will become supply under 71AA. For example, you and me, we both started one partnership firm. Okay, you are not taking classes. I am taking classes in that partnership firm. Done. You are a partner. You are also partner. I am also partner. We both invested. And you are not taking classes. I am taking classes. And because we both invested, we will take the salary or remuneration from the partnership firm, which is not a supply for both of us. Got it? Now, apart from this, I am taking classes now. For that, I will get some money from the partnership firm now. that will become supply under 71AA. Any activity between a person other than individual and its members. So who is the supplier? Person other than individual, means firm or company or body corporate, etc. Who is the recipient? Members of that firm or company, body corporate, etc. Between them if there is any transaction, that is supply under 71AA. Should it be for a consideration? Yes. In the course or furtherance of business? Yes. Whose point of view? Supplier. It can be goods or services. So the only difference between 71A and 71AA is 71A is between a person and any other person, and 71AA is between a person other than individual and its members. That is the difference. Then 71B, what is the difference between 71A and 71B? See there, 71A is any activity, but 71B is what? Import of services. 71A should be in the course or furtherance of business. Can you see that wording? In the course or furtherance of business. But 71B, whether or not in the course or furtherance of business. Example, I am subscribing for Amazon Prime or Netflix by paying some amount. Is it import of services? Yes, because supplier is located outside India. I am located in India. So it's an import of services. Is it for consideration? Yes. Is it in the course or furtherance of my business? No, not in the course or furtherance of my business. It's a personal activity. Even though it is a personal activity, it will become supply under 71B. You can see there. 71B, import of services, whether or not in the course or furtherance of business, yes or no. But it should be for a consideration. And this is seen from whose perspective? Supplier perspective or recipient perspective? Are we seeing it from Amazon Prime, Netflix perspective or the importer perspective? Importer perspective. So therefore we need to see it from the recipient perspective, and the coverage is only services, import of services. Why import of goods is not covered here? Because import of goods is a subject matter of customs. So on import of goods we need to pay customs duty. That's the reason why import of goods is not covered here. We have only import of services. Then next, 71C. 71C, total 4 activities. Even though without consideration, it will become supply. What are those 4 activities? DIP. DRIP. Disposal of business asset on which ITC is availed. For example, I purchased a business asset. On that business asset, I avail the ITC. Now that business asset is disposed of for consideration or without consideration? Without consideration. Then it will become supply under 71C. For example, I purchased a AC in my business, and that air conditioner I have availed the ITC, GST paid availed as ITC. Now that AC I donated it to an old age home, so it will become supply in my hands? Yes, under 71C. And should it be for consideration? No. Should it be in the course or furtherance of business? That is not applicable. Means whatever the donation may be for business purpose or personal purpose, that is irrelevant. But I am disposing of the business asset on which ITC availed. From whose perspective we need to see? Supplier perspective. And what is the coverage here? Only goods. One more example. I am a AC dealer, air conditioner dealer. I purchased 10 ACs in my business, and on those 10 ACs, GST paid I have availed as ITC. Out of these 10 ACs, 2 ACs I took to my home. Will it also come under 71C, disposal of business asset? Yes. Disposal of business asset on which ITC avail, whether the owner has taken to his house or he donated it to someone else, that is irrelevant. But from business point of view, you need to see, is it disposal or not? Yes. So the 2 ACs is not in business. Here owner and business needs to be treated as separate. So therefore owner has taken away, that will also come under disposal of business asset on which ITC is availed. First there should be a business asset. On that business asset ITC should be availed, and that business asset should have been disposed of without consideration. It is supply under 71C. One more example. I purchased a car in the name of my business, and it is my business asset or not? Yes. But on car I cannot take ITC because it's a blocked credit. I cannot take ITC with respect to that car. Now that car I have donated it to an old age home. will it become supply under 71C? No. Even though it is disposal of business asset, but on that business asset whether ITC availed or not availed, not availed. That's why it is not a supply under 71C. Yet another example, listen. I am manufacturing one soap, okay, manufacturing one beauty soap, and that beauty soap I have manufactured and I gave it as free sample to the people to use it. Now, will it become supply under 71C? Is that soap my business asset? Finished goods is my business asset. I have manufactured it, so it's my business asset. And is it disposal of business asset? Yes. Whether ITC availed on that asset? No, I manufactured it. So which means what I purchased? Raw material. What I manufactured is soap. What I purchased is raw material. I would have availed ITC on raw material. So therefore, whatever I have availed as ITC, that only should have been disposed of. Is it clear? What I disposed of here is a different product than what I have availed as ITC. So therefore, 71C will not be applicable. Suppose if I am a trader, I purchased a soap and on that soap purchased I have availed ITC. Now that soap I have distributed as free samples. Now in that case it will become supply under 71C. Yes, disposal of business asset on which ITC is availed. Clear apa? Then next R for related party transactions including transaction between distinct persons. R is what? Related party transaction including transaction between distinct persons. Should it be for consideration or without consideration? Without consideration. Should it be in the course or furtherance of business? Yes, it should be in the course or furtherance of business. And from whose perspective we need to see? Supplier perspective. What is the coverage? Let it be goods or services. And who are related and who are distinct persons? I have given that below. So we'll see that. Let's complete two more points in this. I for import of services. Import of services from whom? Related person or another establishment located outside India. You please check the table and tell me the difference between 71B import of service and 71C import of service. In 71B import of service, that import of service should be from whom? Any person, any person. But 71C import of service should be from whom? Related person or another establishment located outside India. Okay, and another difference, consideration. 71B should be for consideration. 71C is without consideration. And 71B from whose perspective? Recipient. C also recipient. And 71B whether or not in the course or furtherance of business, but 71C should be in the course or furtherance of business. Understood or not? So therefore, listen carefully. I am importing some services from a related person for my personal purpose. Okay, for my personal purpose. Then will it become supply under 71C? No. Why? Because 71C should be in the course or furtherance of business. Suppose if I am importing services from a non-related person for my personal purpose and I paid consideration, will it become supply under 71B? Yes, because 71B should be for consideration whether or not in the course or furtherance of business. Then P is principal agent transaction. Principal agent transactions also without consideration. Why principal agent transaction will be without consideration? Because I am principal, you are my agent. I will send the goods to you to sell that goods. Now, only when you sell the goods, you will pay money to me. Will you pay money to me today itself? No. Consignment chapter in foundation, you would have studied that consignment agent will sell the goods, will receive the money from the buyer, will deduct his commission and will remit the proceeds to the consignor, correct or not? So whenever the goods are sent to the consignment agent is not going to pay the money immediately, which means that, so whenever I am sending the goods to my agent is not going to pay me money now. So therefore it is without consideration. Even then it will become supply. It should be in the course or furtherance of business. And what is coverage? Only goods. So principal agent transaction without consideration in case of services, it is not a supply. Very, very important point. Only in case of goods, it is supply. If it is services, it is not a supply. Only in case of goods, it will become supply. So that is with respect to this 7.1c read with schedule 1. So therefore, what is the 4 activities which are covered under 7.1c? DRIP, DRIP. So D for disposal of business asset on which ITC avail. R, related party transaction including transaction between distinct persons. I, import of service from a related person or another establishment located outside India. P, principal agent transaction. In this entire list, so recipient point of view, we have to see only one. What is that? Import of services. 2 import of services. Okay. So that is import of service normal and import of service from a related person. And in 2 places, we don't have to bother about whether or not in the course or furtherance of business. Where? Import of services and disposal of business asset on which ITC is availed. Correct? We don't have to bother about whether or like it should be in the course or furtherance of business. Then, so here generally it is goods and service. Coverage is goods and service. But in some cases only goods are covered. Disposal of business asset only goods, principal agent transaction only goods, and only service in which place? Import of service. Import of service only services. Now look into the next page. 7.1c, whenever you are writing to 7.1c, you need to give a reference to schedule 1. There are total 3 schedules in CGST Act. Schedule 1 of CGST Act is containing activities even though without consideration constitute supply. Just now we discussed na DRIP, that is there in schedule 1. So therefore whenever you refer to 7.1c, you need to refer to schedule 1. And schedule 2, what is schedule 2? Activities which are classified into goods or services, that is section 7 subsection 1 capital A is schedule 2. And schedule 3, schedule 3 is activities which are excluded from supply, 7 subsection 2. And kindly remember this schedule 1, schedule 2 and schedule 3. Whenever you are writing the explanation, you need to write, suppose one activity, employee to employer is excluded from supply. You need to write as per section 7 subsection 2 read with schedule 3 of CGST Act 2017, services by employee to employer in the course of employment is excluded from supply. Like that we need to give the reference and write. Section numbers should we remember? Try to remember because see you are focusing on this 40 marks, correct? So in this 40 marks you should be able to score as much as you can. So due to that reason try to remember the section numbers, nothing wrong in that. And last at the end of this revised book I have given the summary of sections, like this section 7 is what, section 8 is what, section 9 is what, like that I have given the summary also. So whenever you have time, you just revise those sections, just what is that section number. So section 7 is what, 9 is what, 12 is what, like that. So just at least the headings you need to read once. So along with section numbers when you are presenting the answer, so the appearance will be good, and because of which we get the full marks due to that reason. Okay. So 7.1c schedule 1, 7 subsection 1 capital A schedule 2 and 7 subsection 2 schedule 3. Right now we completed what? 7.1c. So 7.1c read with schedule 1. Disposal of permanent transfer of business asset on which ITC has been availed. Now in this regard one more question, listen. I am a principal and you are my job worker. Job worker means the one who do the process, outsourced process. For example, I am manufacturing one two-wheeler and you are doing the painting. So I manufacture the two-wheeler, I will send the two-wheeler to you, you do the painting and return. So therefore you are my job worker. Now in that case, when I am sending the two-wheeler to you, is it permanent transfer or disposal of business asset on which ITC availed? No. Because after job work, you are going to return that two-wheeler back to me, correct or not? So only when there is permanent transfer or disposal, it will come under supply 7.1c. Got it? Disposal or permanent transfer of business asset on which ITC availed. Should the business asset be current asset, fixed asset? It can be any, either fixed asset or current asset. It can be fixed asset or current asset. The words used there are business asset. Business asset can be fixed asset or business asset can be current asset on which ITC has been availed. Then related party transaction, including transaction between distinct persons. In that, what is the meaning of related? So total 9 relationships we have. These 9 relationships you need to remember, not for the purpose of reproducing it, but for the purpose of application. Means you will never get a question who are all related under GST. You will not get a question, but you will get a situation. X Limited holds 60% in Y Limited. Now they are related. How they are related? So you need to know. One person directly, indirectly controls the another. So then they are related. Is it clear or not? So therefore you don't have to remember as it is. So numbers is not important, but you need to know when you read a transaction, is it a related party transaction or not? So first, what are the points that we need to keep in mind? So total 9 points. In that first one, such persons are officers or directors of one another's business. Easily try to remember. That is, you are appointed as officer or director in my business, and I am appointed as officer or director in your business. Now we both have the mutual interest, correct? So we both are treated as related. Can you remember this here? So one person appointed as officer or director in another person's business. For that, the another person is appointed as officer or director in this person's business. Now these two people are treated as related. Then second point, they are legally recognized partners of a firm. Whether firm and partners are related? No. No. Firm and partners are not related. Only partners of a firm are related. So which means there is a partnership firm with 3 partners ABC. A and B are related. B and C are related. A and C are related. But this partners ABC and that firm is not related. Understood? And they use the word legally recognized partners of a firm. What is the meaning of legally recognized? Means that partnership deed should be registered. It should be a registered partnership firm. So then only it will be called as a legally recognized partners of a firm. Then such persons are employer and employee. Employer and employee are always treated as related. So what are the 3 points that you need to remember? So one person, that is in your business, one person is appointed as officer or director in other person's business, and the other person is appointed as officer or director in this person's business. Then number 2, legally recognized partners. Number 3, employer and employee. Then next point number 4, simple here, that is there are 2 companies. These 2 companies are having a common shareholder holding how much? 25% or more. Then those 2 companies will become related. Got it? 2 companies with a common shareholder holding 25% or more. Then those 2 companies are related. For example, A Limited and B Limited. This A Limited and B Limited is having a common shareholder, say Mr. X. Okay. Now say this. There are 2 companies, A Limited, B Limited. This A Limited and B Limited is having a common shareholder, Mr. X. And Mr. X has invested 30% in A Limited and 25% in B Limited. Okay. Now, if A Limited is making any transaction with B Limited, definitely X will be influencing the transaction, correct? Same way when B Limited is making a transaction with A Limited, X will be influencing the transaction. Why? 25% is holding. To take any decision, special resolution is required. Special resolution in Companies Act is more than 75%. Means without the vote of Mr. X, definitely a decision cannot be taken by the company, correct? 75%, more than 75% required, you are only holding 25%. But without your vote, can a decision be taken? No. Your vote is so crucial, because if all of the shareholders agree also, if you are not agreeing, decision cannot be taken, because you are holding 25%. Are you getting this? So due to that reason, any two companies having a common shareholder with 25% or more, then transaction between those two companies will be a related party transaction. That only fourth point. Any person directly or indirectly owns, controls or holds 25% or more is there, na? That you need to remember as what? Two companies with common shareholder. How much they are holding? 25% or more makes those two companies related. Whether that shareholder and the company is related? No. Whether X and A Limited is related? No. X and B Limited is related? No. But these two companies are related. Then next, fifth point, one person directly or indirectly control the other. So when there will be control, if the investment is more than 50%. For example, holding company, subsidiary company you take, control is there or not? Yes. So X Limited, Y Limited, X Limited invested 60% in Y Limited. So whether X Limited controls Y Limited? Yes. So which means X Limited and Y Limited are treated as related. So control means what here? Investment more than 50%, or majority common board of directors. Majority common board of directors means what? Say there are total 5 directors in two companies. So company X Limited, Y Limited or A Limited, B Limited we will take. A Limited, B Limited, and this A Limited is having total 5 directors pa. So A, B, C, D and E are the directors of A Limited, and B Limited is also having 5 directors, A, so F, C, D and G. So now 3 out of 5 directors are common, correct? So therefore A Limited and B Limited is having control. So therefore A Limited and B Limited are treated as related. So what is it? Common board of directors. Common board of directors, and that too majority common board of directors. Suppose if there is only one director who is common, whether these two companies will have control? No. So when there will be control? Majority common board of directors. So say this. So control means what? Either investment greater than 50%, or majority common board of directors, or controlling the operations. Controlling the operations, example, you know Oyo hotels, Oyo rooms? Yes, definitely you will be knowing. So good experience you will be having now. So this Oyo rooms, are they owning the hotel? Are they owning the hotel? No, they will not own the hotel. Then what they will do? Existing one hotel will be there, that they will take over under the brand name of Oyo rooms. So which means, so there is a hotel, and that hotel is now operated by Oyo. You understood or not? Which means, are they investing? No, they are not investing. And are they like majority board of directors common? No, but controlling the operations. Are you understanding? So investment need not be more than 50, and controlling board of directors also not required. If controlling of operations is there, that is enough to be called it as control related. You understood or not? So tell me, what is the meaning of control? Come on. Investment more than 50%, or majority common board of directors, or controlling of operations. So that is the meaning of control. So one company controls the another. Then both of them are directly or indirectly controlled by a third person. So two companies having a common parent company. Okay, two companies having a common parent company. So two people pa, same father pa, different mother, related yes, no, like that. Okay, so two companies having the common parent company. How it will happen? See this. A Limited, X Limited and Y Limited. A Limited controls X Limited pa. A Limited controls X Limited. So as A Limited controls X Limited, A Limited and X Limited are related, no doubt. A Limited controls Y Limited. So, A Limited and Y Limited are related. And X Limited is not controlling Y Limited. Even then, they both are related. How? They both are having the common parent company. Common parent company. So, which controls both. So, due to that reason, they both are treated as related. Understood? So, 3 points, you tell me next 3 points. First 3 points. So, officers are directors of one another's business. Number 2, legally recognized partners of a firm. Number 3, employer and employee. Over. Okay. Then next 3, common shareholder with 25% or more. Then one company controls the another. Control investment is more than 50%. Controlling operations or majority common board of directors. Third point, 2 companies which are under the common control of a third person. Okay. Then next one. Point number 7. Together they directly or indirectly control a third person. Okay. Together they directly indirectly control a third person. For example, 2 shareholders of a company. 2 shareholders of a company together they are having more than 50%. Means those 2 shareholders have the common objective or not? What is the common objective? That together they two can control the company. So which means these 2 are treated as related if there is any transaction between them. For example, I have given there X Limited has invested 28% in A Limited and Y Limited invested 30% in A Limited. So together X Limited and Y Limited is how much? 28 plus 30, 58%. 58% means they are controlling the company na. So which means X Limited and Y Limited are treated as related. So in that case, all shareholders together will control the company. So then all shareholders are treated as related. No. We have to see relationship always between 2 parties. If it is more than 2, that is not called as relation, that is called as something else. You understood? A relationship will be 2 only, Napa. Correct? Husband, wife, girlfriend, boyfriend, like that. So 3, 4, 5 and all, அதெல்லாம் ஒரு கன்றாவி, அது நீங்க பார்க்குற வீடியோஸ் அது. Okay, so but generally relationship means only 2. So between 2 parties only relationship should be there. Okay, so therefore don't take all shareholders together and see that only 2 shareholders, any 2 shareholders together are they controlling the company? Yes, they are controlling the company, then it will be treated as related. Then next point number 8, they are members of the same family. What's the meaning of family? As per GST, spouse and children, whether or not dependent. Whether grandchildren will come under family? No, grandchildren is not there in family, means only spouse and children. Then brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person. So whether in-laws are considered as family? No, in-laws are not considered as family. And for grandfather, whether grandson is family? No. For a grandson, whether grandfather is family? Yes. Super definition, no? So grandfather, grandson is not a family. But for a grandson, grandfather will become family because they use the word only children. They did not use the word grandchildren, but grandparents are given. What about stepfather, stepmother, stepbrother, stepsister, etc.? Covered pa. So that is covered. That is covered under family definition. Mother can be stepfather, stepmother, brother can be stepbrother, sister, anything. All steps are covered. You understood or not? So then, so that is because multiple seeds when we throw, no, trees will come. All trees are ours only. Okay. And so therefore all these are part of family only. Then next. Also persons who are associated in the business of one another, in that one is a sole agent or sole distributor or sole concessioner, howsoever described of the other shall be deemed to be related. Sole agent means what pa? Sole means one. one agent. Okay, sole agent means one agent, means all my transactions I am doing through that agent only. Means definitely that agent and me share a relationship, correct or not? So that's why they are deemed to be related. Sole selling agent or sole distributor or sole concessionaire. Why they have only one agent, one distributor? So usually they need to have multiple distribution network na. Why they are having only one agent? So which means that they are treated as related. So last 3 points you tell me, what is that? Together they control a third person and then they are members of the same family. Family means spouse and children whether or not dependent, brothers, sisters, parents, grandparents if they are wholly and mainly dependent, then sole selling agent. Okay. So these are the 9 relationships that we have. So whenever you come across a transaction, is it a related party transaction or not, you need to check whether it comes in this 9 points. What is the consequence of related party transaction? Why we need to learn this related definition? In 2 places we have come across related in 7.1c. What is that? Transaction between related parties or import of services from a related person. So there we need to apply this. So in order to know whether it is supply or not a supply. Then between employer and employee, whether all activities are covered under supply or not, we will see little later, but right now remember employer and employee are related. That much we remember right now. Then look into the next one. When agent will be acting on behalf of principal. In case of principal agent transaction, agent should be acting on behalf of principal. Only then the transaction between principal and agent will be supply. For example, I am principal pa, you are my agent. Now when you will be acting on my behalf to the buyer, you are raising invoice in your name, means you are acting on behalf of principal. Now between principal agent, it will be supply under 7.1c. Is it clear? Suppose if I am only raising invoice to the buyer, you are mere agent, you are not acting on behalf of principal. Now between you and me, we don't have any supply. Got it? So when agent will be acting on behalf of principal, so agent should represent principal in all aspects and raise invoice in their name. Whose name? Agent's name. If it is purchase transaction, invoice should be in whose name? Agent's name. So in case of sale transaction, so I am principal, you are my agent and there is one buyer. You are raising invoice in your name. Agent is raising invoice in agent's name. Now agent is acting on behalf of principal. So between principal and agent it will be supply under 7.1c. Same way, you are purchasing goods. You are purchasing goods on my behalf. In whose name you are purchasing goods? Agent's name. Agent is purchasing goods in agent's name and sending it to the principal, then also it will become supply under 7.1c. Suppose if invoice is in principal's name, will it become principal agent transaction? No. You understood? So therefore, agent invoice should be in agent's name. Let it be sale invoice or purchase invoice. Then only agent is acting on behalf of principal. Now look into this question. Don't see the answer in the next page, please. Examine whether the activity of import of service in the following independent cases would amount to supply under section 7 of CGST Act. Ms. Srinidhi Kaushik received Vastu consultancy services for her residence located at Bandra, Mumbai from Mr. Rachel of Sydney, Australia. The amount paid for the said service is 5,000 Australian dollars. Now, is it 7.1a? Why it is not 7.1a? Because it is import of service. Import of service will not come in 7.1a. Then it will come in 7.1b or 7.1c. For consideration or without consideration? For consideration means 7.1b. So for 7.1b, should it be in the course or furtherance of business? Not necessary. It may or may not be in the course or furtherance of business. Will you agree with me? So it may or may not be in the course or furtherance of business. Therefore, it will be coming under 7.1b. And even though it is for her residence located at Bandra, so but it will become supply under 7.1 B. So how will you write in exam? As per section 71B of CGST Act, provision you need to write. First reference, as per section 71B of CGST Act. Provision you give, like reference you gave. Now provision. Import of services for consideration, whether or not in the course or furtherance of business, constitutes supply. Okay. Now discussion. What is the discussion? In the present case, Srinidhi Kaushik is importing services for a consideration of $5,000. Even though used for her residence, it will become supply. You understood? So discussion and finally conclusion. It is supply under 71B. Clear here? So 4-point approach you need to remember. What is that? Reference, provision, discussion, conclusion. Next. Ms. Srinidhi Kaushik received Vastu consultancy services for her residence located at Bandra, Mumbai from her son Mr. Varun residing in Sydney, Australia. Further, Ms. Srinidhi did not pay any consideration for the said service. Now, 71B or 71C, it's import of service, no? It's import of service. 71B or 71C? 71C. Why 71C? Without any consideration. Okay, for 71C, it should be from a related person. Correct? Is it from a related person? Son. But we don't know son is dependent or not. Not required. Because import of service from a related person, son, daughter, spouse, whether or not dependent, they will always be treated as related. So therefore, import of service from a related person. And is it for consideration? No. Is it in the course or furtherance of business? Because please check your book table. So 7 section 1 clause C, one first page we discuss one table na. In that 7.1c, import of service, should it be in the course or furtherance of business? Yes. Then only it will become supply under 7.1c. But here if you see, is it in the course or furtherance of business? No. For her residence. You understood? Even though it is import of service from a related person without consideration, but it is not in the course or furtherance of business. As it is not in the course or furtherance of business, consequently it is not a supply. Not a supply. Okay. Now, number 3. Ms. Srinidhi Kaushik received Vastu consultancy services for her business premises located at Bandra, Mumbai from her son, Mr. Varun, residing in Sydney, Australia. Further, Ms. Srinidhi did not pay any consideration for the said service. Now, import of service, yes or no? For consideration or without consideration? So we need to check 7.1c. Is it from a related person? Yes, son. And is it in the course or furtherance of business? Yes, it is in the course or furtherance of business for her business premises. So therefore it will become supply under 7.1c. You understood here? So like this properly we need to apply and we need to arrive at the answer. Then next area you see, meaning of recipient. Who will be called as supplier? Who will be called as recipient? Who is called as supplier? Easy. The one who is supplying goods or services is supplier. Very, very easy. Who is called as recipient? Don't tell the one who is receiving goods or services, because we have a separate meaning there. If a person is liable to pay consideration, the one who is liable to pay consideration is the recipient. For example, I am providing services to you, but your holding company is liable to pay consideration. Okay, I am providing service to you, but your holding company is liable to pay consideration to me. Then I should raise invoice to whom? Who is my recipient? Holding company, subsidiary company, holding company. Why holding company? The one who is liable to pay the consideration. So it is not the one to whom I am providing service or who is receiving service. The one who is liable to pay the consideration if consideration is payable. Suppose if there is no consideration, then in that case, normal, the one who receives the goods or the one who receives the services. If consideration is not payable, then the one who receives the goods or the one who receives the services. Easier, can you remember? If consideration is involved, who will be treated as recipient? The one who is liable to pay the consideration. If consideration is not involved, the one who received the goods or who received the services. Then next 7 subsection 3, I told you that practically it is irrelevant now, because central government is empowered to reclassify supply of goods or supply of service and vice versa, and they have not done anything. So therefore, for exam point of view, it is not required. Then 7 subsection 2, exclusions from the meaning of supply. Exclusion from the meaning of supply is to be read with schedule 3. Schedule 3. So schedule 1 is 7.1c. 7.1c read with schedule 1. 7 subsection 2, exclusion from supply, read with schedule 3. What are the list of activities which are excluded from supply? Remember the keyword spelled slow. Yes, for sovereign functions of government. Sovereign functions of government means all activities of government is excluded from supply except 4. Only 4 activities are covered under supply. What are those 4 activities which are covered under supply? Come on. Do you remember? So 4 activities which are covered under supply are Department of Post, Airport or Port Services, transportation of goods or passengers, and services to business entities. These 4 activities only covered under supply. All activities of government is excluded from supply. Is it clear? So all activities of government excluded from supply. So you just remember that now. All activities of government excluded from supply. So what are the activities which are covered under supply? Which are covered under supply except covered under supply is Department of Post. So 4 activities covered under supply. Just write there 4 activities. 4 activities covered under supply. 4 activities covered under supply. 4 activities covered under supply. That you can see in exemptions. So there I have specified that. So page number 116. Page number 116. So what are the 4 specified activities which are covered under supply? Department of Post, transportation of goods or passengers, services to an aircraft or vessel inside or outside the precincts of an airport or port, and services to business entities. These 4 specified activities are covered under supply, and all other activities are excluded from supply. Okay. So there you just give reference to page number 116. That is here you give the reference, refer page number 116. Page number 116. Okay. So because there is a connection, that's why I just connected it there. Now what are the 4 activities which are covered under supply part? Department of Post, transportation of goods or passengers, airport or port services, and services to business entities. Now listen carefully. You are receiving water services, water supply from state government, for which you pay water charges. Is it covered under supply or excluded from supply? Is it Department of Post? Is it transportation of goods or passengers? Is it airport or port service? Is it services to business entities? No. So it will be others. Therefore, it is excluded from supply. Then you get a driving license from RTO, for which you need to pay some charges, driving license fees. So driving license charges, whether it will be covered under supply or excluded from supply. First, Department of Post, airport or port, transportation of goods or passengers, no. Services to business entities, no. Others. So therefore it will be excluded from supply. Suppose if a company is purchasing a car and they register the car in the company name and pay the registration charges to RTO, will it come under supply? Yes. Where services to business entities. If you receive speed post or express parcel post, whether it will be covered under supply? Yes. Department of Post. And suppose if you are traveling in metro train or railways, etc., so whether it will come under supply? Yes. Transportation of goods or passengers. Now got the clarity here? But generally generally government activities are excluded from supply. Only 4 specified activities are covered under supply. Understood? Then P for post, government post, constitutional post and nominated post. So government post means MLAs, MPs or local authority mayor or chairman, etc. will be called as government post. So they will stay only for a period of 5 years. After that again they need to vacate the office, contest in the election, then only they can hold the office. So these people get money, remuneration from whom? Government. That remuneration received by them will be excluded from supply. Same way, constitutional post. Constitutional post means, so we have governor, president, collector, chief justice of India, etc. These are some constitutional posts. So they receive any amount from the government, that is also excluded from supply. Then nominated post. There will be some bodies or boards under government. That body or board will be having a head. That head will be nominated by the government and that head will receive some money. So that money received by that head is also excluded from supply. Example, SEBI chairman, RBI governor, CBI director. Then these are all some examples of body or board under government for which the head will be appointed. So they will receive some money, that is excluded from supply. So what is yes? Sovereign functions of government. Then what is P? Post. What post? Government post, constitutional post, nominated post. A for actionable claims other than lottery, betting and gambling. So means what actionable claims are covered under supply? Lottery, betting, gambling is covered under supply. All other actionable claims are excluded from supply. Clear? Then next L, legal fees. Legal fees, fee collected by court or tribunal. So court or tribunal will be collecting some legal fees and this is like documentation charges, that is also excluded from supply. But this will be like May 23 will be the last attempt for this, because in future they are going to make it taxable. So they are going to omit this. Okay. So definitely this point could be tested for your exam. So legal fees, fee collected by court or tribunal is excluded from supply. Then another L is land sale. Land sale, so sale of land is always excluded from supply part. But sale of building is excluded from supply when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Simple, listen. So completion certificate means what? Whenever the project is completed, building is completed, we get the completion certificate from the local authority. First occupation means what? Whenever out of the apartment one flat is occupied, that is known as first occupation. So therefore completion certificate is obtained. Before obtaining completion certificate itself, if the consideration is received, whether that flat will be chargeable to GST or excluded from supply? Chargeable to GST. Why? Because entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. So this information, GST on sale of flats I have given in a different place. So you can see that in page number 29. In page number 29 you can see GST on sale of flats or buildings. So entire consideration received before obtaining completion certificate covered under supply or excluded from supply. Entire consideration received before completion certificate, covered under supply. What is excluded from supply? Entire consideration received after completion certificate. Suppose if entire consideration is received after completion certificate, is it covered under supply or excluded from supply? Excluded from supply. What if part consideration is before and remaining consideration is after? Covered under supply or excluded from supply? Covered under supply. So when it will be excluded from supply? When the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Now listen pa. There is a under construction flat pa. That under construction flat when you buy, are you buying the flat or are you paying for the construction? There is a under construction flat. Pillars are laid down, one flat is getting constructed. Now you purchased it. What you purchased is flat or you paid for the construction service. You paid for the construction service because flat is not yet complete. Only when flat is complete, then only it will be called as you purchase the flat. Then what you have paid now is not for the flat. What you paid now is for the construction of the flat. That's why what they are telling, if you buy a completed flat, then it is sale of building and it is excluded from supply. Sale of immovable property, it is excluded from supply. Until that point of time, if you pay money, that is only for the construction. Therefore, it will be treated as works contract service. Okay. Now, usual tendency is like we pay some booking advance and book a flat, and thereafter we will pay the balance. Correct? So now, whether the booking amount is only taxable or entire amount will be taxable. Entire amount will be taxable. So GST payable on entire consideration. Okay. Then look into another example for first occupation. Say I commence a project containing some flats. Okay. And that particular project commenced construction on 25th March 2019. And immediately after commencement of construction, lot of people will come and book the flats. So like that, some 10 people booked the flats. Out of these 10 people, 1% occupied the flat on 15th May 2020. Okay. Thereafter, 25 flats booked. Then I got completion certificate from the local authority for the project. After completion certificate, 5 flats booked. Now, which will be taken as the deemed completion date? Completion certificate date or first occupation date, whichever is earlier. Which is earlier? 15th May 2020. Correct? Correct or not? So, completion certificate date is 28 September 2021 and first occupation date is 15 May 2020. Whichever is earlier, first occupation date is earlier. As on first occupation date, how many flats booked? So on the 10 flats only GST payable. Got it? Then on remaining flats GST payable or not payable? GST not payable. Why GST not payable? Because all these flats are booked after completion certificate. If booking itself is after completion certificate, then consideration, entire consideration is received after completion certificate. Therefore, it will be excluded from supply. Understood or not? So therefore, tell me what is excluded from supply? Sale of land, including sale of building. When sale of building is excluded from supply? When entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E is employee to employer in the course of employment. So salary is excluded from supply. That is the meaning. Employee to employer in the course of employment. Say you are appointed as manager of a company for which you are getting some salary, that is excluded from supply. So, but remember, only when it is in the course of employment it is excluded from supply. What if it is not in the course of employment? Means not excluded from supply. Listen carefully. Mr. A chartered accountant, appointed as finance manager with a salary of 12 lakhs per annum. Covered under supply or excluded from supply? Excluded from supply. Employee to employer in the course of employment. Now, that Mr. A, who is a chartered accountant, did an internal audit for one branch which is not in the scope of his employment contract, but for which he received 1 lakh rupees from the employer. Is it covered under supply or excluded from supply? First, is it excluded from supply? No, because it is not as per employment contract. Then we need to refer to inclusions. If it is not covered under exclusions, then we need to refer inclusions. So in inclusions, will it come under supply anywhere? Activity. What is activity? Doing internal audit. For consideration, yes. How much? 1 lakh. Is it in the course or furtherance of his business? Yes. So therefore it will become supply under 7(1)(a). Understood or not? So now this employer-employee transaction, we have one more point also. You can see in page number 19 in the footnote. Page number 19 in the footnote. However, services by employee to employer in the course of employment is not treated as supply as per Schedule 3 of CGST Act, and gifts by employer to employee. So, employer is giving gift to the employee. So, what is gift? Will it be specified in the offer document or not specified in the offer document? Not specified in the offer document. If it is specified in the offer document, what is it called as? Perquisite. If it is specified in the offer document, it is called as perquisite. If it is not specified in the offer document, it is called as gift. So, gift by whom to whom? Employer to employee. Not exceeding 50,000 per annum per employee is excluded from supply. Suppose if the gift exceeds 50,000 per, fully it will be treated as supply. For example, gift is 55,000, only that 5,000 rupees is treated as supply, or entire 55,000 treated as supply? Entire 55,000 treated as supply. But sir, for gift there is no consideration. Not necessary, because it will become supply under 7(1)(c). Why 7(1)(c)? Because employer and employee are treated as related. So even though there is no consideration, it will become supply under 7(1)(c). Also, any benefit covered under salary of a document forms part of salary and is excluded from supply. Now, what you need to remember is supply by employer to employee. Kindly make note. Supply by employer to employee. Supply by employer. Supply by employer to employee. Supply by employer to employee. So it can be goods or services, correct? Correct or not? It can be either goods or services. So that's why I use the word supply. It can be goods or services. Now divide it into two. For consideration, without consideration. For consideration or without consideration. Is it for consideration or without consideration? So can you give me example of for consideration? Supply by employer to employee for consideration. Cab facility provided by employer to employee and collected some charges. Food facility provided by employer to employee and collected some charges. You understood or not? So some charges they collect nominal charges. So for food daily 15 rupees or 20 rupees like that they will collect. For travel also some charges will be collected. That is supply by employer to employee for consideration. Is it covered under supply or excluded from supply? Covered under supply. And which section? Consideration is there. So 7(1)(a). Supply under section 7(1)(a). Supply under section 7(1)(a). Suppose if it is without consideration, we cannot directly classify it as 7(1)(c). We should check whether it is perquisite or gift. So what is the classification there? How do we know whether it is perquisite or gift? So this without consideration is divided into two. Perquisite or gift. So when it will be perquisite? Contract of employment. If it is specified in contract of employment, it is perquisite. If it is not specified in contract of employment, it is gift. So perquisite covered under contract. Covered under contract. Gift is not covered under contract. Not covered under contract. If perquisite is covered under contract, what is the answer? Supply or not a supply? Not a supply, because perquisites will form part of salary. Therefore, it is excluded from supply. Excluded from supply. Excluded from supply. Okay. What if it is gift? Again, it is divided into two. So, does not exceed 50,000 per annum per employee or exceeds 50,000. So, value, we should take value per. Value does not exceed 50,000. Value less than or equals to 50k. Value less than or equals to 50k per annum per employee. Value greater than 50k per annum per employee. If the value does not exceed 50,000 per annum per employee, is it supply or excluded from supply? Excluded from supply. It is excluded from supply. Then suppose if it is exceeding 50,000 per annum per employee, is it supply? Yes. Supply under section 7(1)(c). Supply under section 7(1)(c). While taking the value, should we include GST or exclude GST? Exclude GST. For example, I purchased a mobile, so which is 45,000 plus GST. So after adding GST, it went to 50,000 plus. So whether it is covered under supply or not covered under supply? Not covered under supply. So don't add GST. Without GST, what is the value of the mobile? 45,000. So it does not exceed 50,000. So therefore it is not a supply. So that is with respect to supply by employer to employee. Got the clarity, pa? And here supply under 7(1)(c), entire amount or only that amount exceeding 50,000? Entire amount. Entire amount. Then next one is supply by employee to employer. But what will be given by employee to employer? Services. So supply of services, second chart, by employee to employer. Employee to employer. Supply of services by employee to employer. Now what is the classification you need to check? In the course of employment or not in the course of employment? If it is in the course of employment, in the course of employment, not in the course of employment, not in the course of employment. If it is in the course of employment, what is your answer? Excluded from supply. Excluded from supply. If it is not in the course of employment, then we need to apply section 7 subsection 1. Correct? If it is not in the course of employment, means not excluded from supply. When it is not excluded from supply, then we need to refer to inclusion, 7 subsection 1. So therefore, again, in 7 subsection 1, what is the criteria? In the course or furtherance of business or not in the course or furtherance of business, correct or not? Because here 7(1)(a) is what? For consideration in the course or furtherance of business. So that we are checking. In the course or furtherance of business. In the course or furtherance of business. In the course or furtherance of business. Not in the course or furtherance of business. Not in the course or furtherance of business. Not in the course or furtherance of business. If it is in the course or furtherance of business, what is the answer? It will be supply under section 7(1)(a) or 7(1)(c) applicable. Okay, without consideration, if it is there, okay, fine. Again, another division we are seeing. For consideration, without consideration. For consideration and without consideration. If it is for consideration, what is your answer? 7(1)(a), superb. I will agree with that, no doubt. If it is for consideration, it will be supply under section 7(1)(a). Supply under section 7(1)(a). Okay, if it is without consideration, no, 7(1)(c) will not come. That is a mistake which we are doing. It will not be 7(1)(c). Why it will not be 7(1)(c)? Concentrate. If it is not in the course of employment, first of all, are they employer-employee? If they are not employer-employee, then how come you can bring them under related? Are you getting this? Again, I am repeating, if it is not in the course of employment, they are not employer-employee. If they are not employer-employee, first of all, related will not come. Means 7(1)(c) will not be applicable. Are you understanding? So therefore, if it is without consideration, the answer is what? Not a supply. Not a supply. Okay. Suppose if it is not in the course or furtherance of business, then also it is not a supply. Why it is not a supply? First 7(1)(a) you check. For 7(1)(a) it should be in the course or furtherance of business. Yes. 7(1)(c) also it should be in the course or furtherance of business. Yes or no? So which means if it is not in the course or furtherance of business, then also it is not a supply. Now, there is one circular, recent circular related to perquisites. So, CBIC gave a circular, recent circular stating that, so whenever any product or service which is given by the employer to employee is covered under the contract, it is perquisite and forming part of CTC and it is excluded from supply. Because of that circular, so this concept may be tested in May 23 exam. So that's why I have discussed in detail. So these two charts you need to keep in mind. Okay, one is employer to employee, another is services by employee to employer. Okay, then next one, you see the next exclusion. So we have completed so far S, P, A, L, L, E. S for sovereign functions of government. P, post, that is government post, constitutional post, nominated post. A, actionable claims other than lottery, betting, gambling. L, legal fees, that is fee collected by court or tribunal. Another L, land sale including sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. E, employee to employer in the course of employment. D, death related activities. All death related activities is excluded from supply, that is funeral, burial, crematorium, mortuary, including transportation of deceased. at least post death. So let them die peacefully. So don't need to pay any GST, etc. Then yes, you see next one, stalled we completed. Yes, SLOW, sale in high seas. This sale in high seas, so many students were finding it difficult to understand. That's the reason why this time I have given one chart related to that. Have a look into this chart below. So what is this sale on high seas basis? So visible appa properly? Okay, see the first point you see. So there is a importer, Mr. Rajesh, who is a original importer. This Mr. Rajesh placed an order for goods worth rupees 10,000, worth $10,000 to foreign seller. First point you got the clarity. Then what that foreign seller did, he handed over the goods to the shipping company. And then the shipping company is giving a document of title to the goods. What is the document of title to the goods? Airway bill or bill of lading. AWB means airway bill, BOL means bill of lading. So that airway bill or bill of lading is sent by the foreign seller to Mr. Rajesh. Now Mr. Rajesh is having airway bill or bill of lading, which means he is the owner of the goods. Is it clear? Up to this clear? 4 points. First point, Rajesh placed an order with the foreign seller. Second point, foreign seller has handed over the goods to the shipping company. And number 3, shipping company has given airway bill or bill of lading, and that has been sent by the foreign seller to Mr. Rajesh. Got it? Now, the goods are in transit. The goods are not yet reached India. The goods are in transit. When the goods are in transit, what Mr. Rajesh did, he transferred that airway bill or bill of lading to Mr. Satish, a subsequent buyer, for which Mr. Satish paid $11,000. This sale is only known as sale on high seas. This sale is only known as sale on high seas. Now, Mr. Rajesh is receiving $11,000 now from Satish. That is excluded from supply. You understood? That is excluded from supply. Sale on high seas basis is excluded from supply. So Rajesh gets $11,000 from Satish. That is excluded from supply, means Rajesh is not required to pay any GST on that $11,000. Why like that? Why like that? Because Satish will pay the customs duty on that goods. Now look into the step number 7. Now goods have unloaded. So after we have, that is after Rajesh has sold it to Satish, document of title, then the goods have been unloaded in the port, customs port. Now who will be called as importer? Rajesh or Satisha? Satish, because Satish is having the document of title na. Now Satish will be called as importer. Satish will file the bill of entry, airway bill, etc. and pay the customs duty including IGST on how much? $11,000. Therefore release of goods. So that's the reason why on $11,000 already Mr. Satish is paying. So Mr. Rajesh is excluded from supply. You understood or not? On this $11,000 IGST is already paid. Who is paying? Satish. Suppose if Rajesh also pays IGST on $11,000, what he will do? In turn collect it from Satish. Means Satish will have 2 times IGST burden on the same $11,000. Correct? First at the time of import he pays IGST on $11,000. Again if Rajesh charges the GST and collects it from Satish, again there will be another amount. So then 2 times GST on same amount will lead to double taxation. So it is excluded from supply. Got the clarity? So now what you need to remember from this example, sale on high sea basis is excluded from supply. Got it? What is sale on high seas? Sale by way of transfer of documents to title before import or after import? Before import. What is sale on high sea basis? Sale by way of transfer of document to title before import or after import? Before import. That is this sale on high seas. That is sale before import. Then L refers to liquor license by state government. So state government will be giving liquor license, that is license to sell liquor, for which they collect a licensing fee that is excluded from supply. Now say for example I paid some 30 lakhs and I got the liquor license, and the 30 lakhs collected by the state government is excluded from supply. Now I transfer this liquor license to another person. So for 40 lakhs, whether that 40 lakhs is also excluded from supply? No, because only liquor license granted by state government, underline that, by state government. Only liquor license granted by state government is excluded from supply, but liquor license granted by any other person is not excluded from supply. Then, outside the country movement of goods. Outside the country movement of goods means I am a seller located in India, you are my buyer, you are also located in India, but the goods are originating outside India, from say my branch in outside India to your branch in outside India. Even though the money is paid in India, but goods are neither coming into India nor leaving India, or goods are not sold in India. So neither import nor export, nor it is a domestic supply. That's the reason why there is no GST, even though the money is received in India. So that is sale happened where the movement of goods is outside India. Then warehoused goods under customs sold. Like how sale of goods on high seas basis, sale of warehoused goods also is taking place. So sale of warehoused goods means what? What is the difference here? Simple. In this transaction, where the goods were at the time we transferred the document of title? Transit. In case of warehoused goods, where the goods will be? The goods are imported and is kept in the warehouse without payment of customs duty. Ditto pa, same, everything same. But only thing, goods are already imported and is kept in the warehouse. Now Rajesh will transfer the document of title to Satish. Now also Satish only will go and pay customs duty. As Satish is paying customs duty on the revised price, so Rajesh is excluded from supply. So two cases it is excluded from supply. On import, what are they? Sale on high sea basis or sale of warehoused goods sold under customs. So these are the exclusions from supply. And GST implications on employer-employee relationship. So these two charts only I made you write, okay? Sir, why you made us write? It's there, but only when you write you will remember for that reason, okay? Should not complain and all. So why are you making us write and all? At least at that time you will be attentive in the class, no? So these are the two charts, so which I have discussed, and you understood now employer-employee relationship. So mark this as very, very important part. GST implications on employer-employee. I feel this time definitely questions will be asked on this. Then some important definitions or points. Meaning of goods, meaning of services. First we will see meaning of goods. Goods is defined under section 2 clause 52. Goods means what? Any kind of movable property. And goods includes actionable claims or growing crops or things attached to a farming part of land agreed to be severed under a contract of supply. First, goods means any kind of movable property. So immovable property will not come under goods. It should be movable. What are actionable claims? Actionable claim means any instrument which satisfies 4 conditions is called as actionable claim. You can see below. Right to receive a benefit or recover a debt, which is legally enforceable, can be transferred from one person to another person, and the holder of such right is entitled to receive the benefit or recover the debt. If these 4 conditions are satisfied, so then that instrument will be called as an actionable claim. Now, is lottery ticket an actionable claim? First, you have a lottery ticket. You have right to receive benefit. Legally enforceable? Yes, in the state where lottery system is prevailing. Transferable from one person to another person? Yes. And the holder of such lottery ticket is entitled to receive the benefit. So lottery ticket is an actionable claim. Like that, is bill of exchange an actionable claim? Yes. Bill of exchange you have, means you have right to receive a benefit or recover a debt. Recover a debt. And transferable? Yes. Legally enforceable? Yes. Whomsoever is holding bill of exchange, that person will recover the debt. So then, whether bearer check is also actionable claim? Yes. So because you have a bearer check, means you have right to receive a benefit. Bearer check, whomsoever is having, they will receive the benefit. And can the bearer check be transferred easily? Yes. And legally enforceable? Yes. So therefore, these are some examples of actionable claims. But only 3 actionable claims are covered under supply. What are they? Lottery, betting, gambling. Only 3 actionable claims are covered under supply, and all other actionable claims are excluded from supply. Then you can see that goods means any kind of movable property. Goods includes actionable claims and also includes growing crops or things attached to our farming part of land. Okay. A photography porum pa. You know then na okay. Disturbance so includes actionable claims, growing crops or things attached to our farming part of land. So why it is actually covered, they are immovable. Trees are immovable. For example, today I enter into contract with you to sell the teakwood plantation. So today it is there as attached to earth. But under the contract, I have agreed to cut it and deliver. Correct? So even though at the time of entering into contract it is immovable, but at the time of delivery it is going to be movable. That's why it is included in the meaning of goods. Got it? Then same way, mango crop. Today at the time when I enter into contract to sell the mango crop, it is attached to land. Correct? And at the time when I deliver, so when I will deliver after 3 months, today it is in the form of crop, so the mango should ripen and then I will be selling it. So therefore, even though at the time of entering into contract it is immobile in nature, but at the time of delivery it will become mobile. That's why it will be included in the meaning of goods. Then goods excludes 2 things. What are they? Money and securities. Money and securities are excluded from the meaning of goods. So what is money? What is the meaning of money? Indian currency or foreign currency. Either it can be Indian currency or foreign currency. And it includes any instrument recognized by RBI. And it excludes currency held for numismatic value. Means old coins, old currency notes will be called as currency held for numismatic value. Sale of old coin. So in OLX and all, if you search old coins like that, so lot of people will be willing to sell old coin. So one person has posted one ad, that is this 200-year-old coin, and the 200-year-old coin, where on the back side of the coin this Lord Rama, Hanuman and all is there printed on that coin. And that coin is posted for 15 lakhs. 15 lakhs it has been posted, and people are ready to buy that. Now that coin is not in Indian legal tender today, but people are ready to buy that particular coins. Are you understanding this? So yes, people are crazy over old coins. There are a lot of people. You and me, we will not buy, but there are a lot of people who will be purchasing it. Now, whether this will be covered under supply of goods or not? Yes. Because if you see, goods definition excludes money. Goods definition excludes money. Service definition, if you see, service definition also excludes money. But money excludes currency held for numismatic value, which means old coins is not money, means it will come under goods. So therefore it will be chargeable to GST. So please write down in page number 24 below that chart, sale of old coins, sale of old coins, sale of old coins treated as sale of old coins treated as supply of goods. Treated as supply of goods. Then next, this 10 rupee coins and all, not many people are accepting in every state. So Tamil Nadu, no restriction. Tamil Nadu 10 rupee coins and all is circulated. But if you see in some other states, like neighboring states, Andhra Pradesh and all, so 10 rupee coins, even Karnataka also 10 rupee coins, they are not accepting. So they say, no, we don't need, give currency note only. So now, therefore, 50 10 rupee coins are given to you, and I took 50 rupee note. Is it supply or not a supply? Not a supply. It is neither supply of goods nor supply of service because it is purely transaction in money. Suppose if I am giving 40 10 rupee, 60 10 rupee coins and took a 50 rupee currency note, then that 10 rupees extra you are getting na. How much I gave you? 60 rupees. But how much you gave me? 50 rupees currency note. So therefore this extra 10 rupees will be treated as consideration and that will be included. See this. Transaction in money for a separate consideration is included in the meaning of service. So money is neither goods nor services. But transaction in money for a separate consideration is treated as supply of service. Again the same example, one more example. $1 is 80 rupees. You are giving me $100 and I am giving you 100 into 80, 8,000 rupees. So neither goods nor services. Suppose if I am giving you 8,000 minus 1%, that is I have deducted 1% and I gave the remaining amount, that is 80 rupees I deducted and I gave you 7,920 rupees. Now in that case that 80 rupees is treated as supply of service. Is it clear? Transaction in money for a separate consideration. So therefore money is neither goods nor services, but transaction in money for a separate consideration will be treated as supply of service. And any instrument recognized by RBI. Can you give me examples of instrument recognized by RBI? That Indian currency, it is covered pa. Currency notes and all, it is covered. Bonds, then even promissory note, bill of exchange, traveler check. So wallets we have na. So Paytm wallet, Airtel money wallet or Amazon Pay wallets, these are all recognized by RBI. So that's the reason why when you have a Paytm wallet, you need to complete the KYC. Without KYC, you cannot have a wallet. So therefore, all these wallets are instruments recognized by RBI. That is also treated as money. For example, I am giving you 10,000 rupees in a wallet, okay, and the 10,000 rupees is moved from the wallet to the bank account. Now in that case, so whether it will be transaction in money, yes, neither goods nor services. But usually from Paytm wallet to your bank account, if you transfer money, there will be some percentage deducted. Are you aware? In your Paytm wallet, some money is there, pa. That money, if you want to transfer to your bank account, some 1.5% like that, it will be deducted. So which means transaction in money for a separate consideration, that 1.5%. So that 1.5% will be treated as supply of service. Now, is cryptocurrency an instrument recognized by RBI? No. Cryptocurrencies like bitcoins, etc., is not an instrument recognized by RBI. So, sale of cryptocurrencies, will it be treated as supply of goods? Yes, just like old coins. So, sale of old coins, below that, sale of cryptocurrency treated as supply of goods. Sale of cryptocurrency treated as supply of goods. Next. So therefore, goods definition we understood. Goods means what? Any kind of mobile property. It includes actionable claims or growing crops or things attached to a forming part of land agreed to be served under a contract of supply, and goods excludes money and securities. And actionable claims, only 3 actionable claims are now covered under supply. What are they? Lottery, betting and gambling. Then what is the meaning of service? Service means, you see, service means anything other than goods is service. Simple definition. Anything other than goods is service. And service also excludes money and securities. Service includes, so transaction in money for a separate consideration, or facilitating or arranging transaction in securities. Facilitating or arranging transaction in securities means stockbroker services, depository services, etc. That is, I am not doing transaction in securities, but I am facilitating a transaction in security. So that will be coming under supply of service. Then meaning of consideration. See there, consideration as per section 2 clause 31 includes monetary consideration or non-monetary consideration. Monetary means money, and non-monetary means it can be in the form of goods or it can be in the form of services. And consideration excludes subsidy from central government or state government. So subsidy is something which is gracious payment which is made. There is no contract and all for subsidy. So some grant which is given by central government or state government, that will not be treated as consideration. What if the subsidy is given by some other person? Will it be treated as consideration? Yes. Subsidy from NGO, treated as consideration? Yes. Subsidy from holding company, treated as consideration? Yes. Only subsidy from central government or state government not treated as consideration. And consideration is also excluding refundable security deposit. Refundable security deposit also not treated as consideration. What if it is non-refundable security deposit? Treated as consideration. For example, you take a LPG connection. For that LPG connection, you have to pay 2000 rupees non-refundable security deposit. The 2000 rupees is treated as consideration. Suppose if you get, like you take a house on rent or a commercial property on rent. So there you need to give 6 months rent as security deposit. Whether that is refundable or non-refundable, refundable. That will not be treated as consideration. Then this consideration can be received from recipient or any other person. So what we need to see is presence of consideration. For example, when you buy a two-wheeler or four-wheeler, that dealer will do the free after-sale service. Is it really free? No, it is not free. Why it is not free? Because so the manufacturer of the two-wheeler or four-wheeler will pay money to the dealer who is doing free after-sale service. That's the reason why whenever free after-sale service is done, they take one coupon from you. So one coupon, one manual will be given to you, one coupon you will pay. So one coupon you will give, you will not pay money, you will give that coupon. So that coupon, the dealer will redeem from the manufacturer and they get the money. So therefore, even though they are not getting consideration from the recipient, but for the transaction, are they getting consideration or not? Yes, there is consideration. So consideration can be received from recipient or any other person. What we need to see is presence of consideration is there or not. Then consideration should be in respect of, in response to, or for the inducement of supply of goods or services. In response to, say for example, one producer of a movie will gift to the director one car. So that car given as gift to the director is in response to making a super hit movie. Correct or not? Otherwise will the producer will give? No. So therefore that will come under consideration. You understood or not, pa? So therefore director or hero, heroine, etc. when they receive some gift from the producer, once the movie becomes super hit, so whatever gift that they are getting is in response to supply of goods or services that is acting in the movie, so that will become consideration. Because these people who give it as gift, they will not give it as gift in four walls. So what they will do, they will put ad, so all these things. So everywhere it will be known. Correct or not? In Instagram and newspaper, everywhere it will be given. So which means department will know that. So therefore you have to treat it as consideration and GST is payable on the same. Then for the inducement of means, say for example, one hero is there, producer come hero, and so he wanted one heroine to be acted next to him, and no heroine is accepting. No heroine is telling, no, I will not act next to you, like that. So now that producer is very rich person, so has lots of property. Now he will give one property to a heroine, asking the heroine to sign the movie. After signing the movie, remuneration is also paid. That remuneration paid for the movie will come under in respect of, and giving a property and making her sign the movie is for inducement of. Understood or not? So consideration should be in respect of, in response to, or for the inducement of supply of goods or services. Then activity without consideration or consideration without activity is not a supply under 7(1)(a). Activity without consideration means what? I am not getting any consideration for doing that activity. Like free activities or charities, etc. and all will be coming. Okay. For example, this batch pa, I am not collecting any amount from you. So therefore, activity without consideration, not a supply under 7(1)(a). Not required. For that I did not tell, or example kaga sonna. Okay. So because already I have collected from you some way or other, so therefore because you would have paid lots and lots of money already, so therefore it's just a moral responsibility, like you might have attended some regular batch or past fast track batch, etc. and you did not, so maybe I could not take class properly, etc. and all, so you could not clear, or maybe you attended regular batch properly, I did not take that way, because of that I am doing like this. You think that way, okay. Now listen, activity without consideration is not a supply under 7(1)(a). Okay. Consideration without any activity, example, donations. Donations is consideration without any activity. I get money, but in response to that, I don't have to do anything. So therefore, unconditional donation. Unconditional donation means what? We receive money, and against that money, we don't have obligation to do anything. What if it is a conditional donation? Will it become supply? Yes. So donations are divided into two: conditional donation, unconditional donation. Conditional donation means I have an obligation to supply goods or services against the donation, so it should be treated as consideration, and that will become supply under 7(1)(a). Unconditional donation means, so I don't have obligation to supply any goods or services against the donation, so therefore it is not treated as consideration and it is not a supply. For example, I am constructing one temple and you gave me a donation, and you are asking me to display your name, God name also next, my name only should come first. Now it is what donation? Conditional donation. So that will be treated as consideration, and it will become supply under 7(1)(a). Suppose if you are giving money and you are telling, sir, you don't display my name anywhere, so this is just because of love and affection I am giving. So now it will be what donation? Unconditional. But I displayed your name. Still it is unconditional donation. Still it is unconditional donation, but concentrate. If this display of name gives you a business advantage, then it is deemed as conditional donation. Again I am repeating, you are giving money, you are asking me to display the name. So type of donation, conditional donation. Supply under 7(1)(a), yes. You are giving money and you are not insisting me to display the name, but I am voluntarily displaying the name. What type of donation? Unconditional donation. Not treated as consideration, not a supply under 7(1)(a). However, if the display of name gives you a business advantage, then it will be treated as supply under 7(1)(a), deemed as conditional donation. So if donor name displayed anywhere in the premises against donation out of gratitude but not as a compulsion, display of name results into business advantage to the donor, then it is supply under 7(1)(a). If individual name is displayed, means no business advantage, then it is not a supply. For example, have a look into this illustration. The temple of ancestral deity of Mr. Aman Goyal and his family is located at Beri, Haryana. The temple is run by a charitable organization registered under 12A of Income Tax Act 1961. The family has got unshakable faith in their ancestral deity. Mr. Aman is big entrepreneur having flourishing business of tiles in Gurugram. Upon the birth of their first child, he donated 10 lakhs to the said temple for construction of a sitting hall in the temple. On the main door of the sitting hall, a nameplate was placed stating donated by Mr. Aman Goyal upon birth of his first child. Any business advantage? No. So therefore it will be coming under what type of donation? Unconditional donation. And will it be treated as consideration? No. And therefore it is not a supply. So this donation, so the purpose is philanthropic and not an advertisement, and hence GST is not leviable. Suppose if you see here, some light boards and all are given, on left side and right side you can see some light boards are given, light board, and on that light board the brand name is mentioned, correct? Adu donation pa. On a donation there is a brand name mentioned, so therefore it will be coming under. So even though no obligation, but the brand name when we mention, automatically we are giving like an advertisement, correct or not? Advertisement means there is a business advantage, so it will be coming under conditional donation. For example, in the same case, donated by Mr. Aman Goyal, proprietor Goyal Industries, then conditional. So the business advantage they are deriving, so it will be coming under conditional donation, treated as consideration, and that will become supply under 7(1)(a). Then next one you see meaning of business. After this we will take break pa. Listen. Meaning of business. So we have general meaning of business and specific activities. So as per the general meaning of business, what will be coming under business? Trade, commerce, manufacture, profession, occasion, adventure, wager. Wager means betting activities or any other similar activity. Now, so trade means sale of goods. Commerce means service sector like transportation, insurance, warehousing, etc. Manufacture is conversion of raw material into finished goods. Profession is I got a skill which I obtained by way of qualification. Using that skill I make a living, like chartered accountants or company secretaries, cost accountants, doctors, engineers, advocates, they will be coming under profession. Then occasion. Occasion means I got a skill, not by way of qualification but by way of experience, and using that skill I survive. For example, magician or person who act in movies or even this astrology. So these people are called as vocation. Then adventure. Adventure is I got a skill but I am not using that for my living, but I am using it as a passion, and incidentally I get some money. That is adventure. For example, a doctor performing magic show is adventure. Correct? Correct only, no, yeah. And a chartered accountant acting in movie is adventure. Yes or no? Then an actor making a painting is adventure. How, sir? Sir, being an actor is occasion. They make a painting and get money, that is a different skill, adventure. Being a doctor is profession. When they perform the magic show, that will be coming under adventure, not occasion, because that is not for their living. For their living already they have being a doctor, profession. Same way, being a chartered accountant is profession, acting in a movie will be coming under adventure. Okay, so adventure is some other skill used as a passion. Wager means betting activities, any other similar activities. So its incidental or ancillary is also covered. What is incidental or ancillary means? Supporting activities. For example, a chartered accountant, and chartered accountant taking classes, authoring books, giving seminars will come under incidental or ancillary to his profession. Understood or not? Same way, irrespective of volume or frequency. Irrespective of volume or frequency means it can be one-time activity or it can be a recurring activity. Whatever it may be, it will be treated as business. Whether or not for a pecuniary benefit. Pecuniary benefit means profit motive. Whether profit motive is present or not, it will be treated as business. So it is a general meaning of business: trade, commerce, manufacture, profession, occasion, adventure, wager or any other similar activity. Its incidental or ancillary is also covered, and irrespective of the volume, frequency or continuity, and whether or not for a pecuniary benefit. For example, Tirumala Tirupati Devasthanam is selling dairies and calendars and laddus. Is it for profit motive or non-profit motive? Non-profit motive, not for profit motive. They don't have to sell that to earn money. So because even otherwise, he will be getting crores and crores of money. You understood? So therefore, by selling calendar and dairy, no need to earn money. But sale of calendars and dairies is what motive? Non-profit motive. So even then it will be treated as business. Why? Because there is sale. You understood? Then next part. Specific activities. Entry tickets. All entry tickets are treated as business. So entry to theme park or entry to temple or entry to any cinema theater, everything will be business. Then holding an office accepted in the course or furtherance of trade, vocation, profession. Example, there is a chartered accountant. That chartered accountant is elected as ICI president. For being an ICI president, they will earn some money, na? That will also come under business. Then supply of goods or service in connection with commencement or closure of business. That is at the time of commencement of business. Say one restaurant. So I opened one restaurant. For that restaurant, I have purchased some 10 ACs. Now I have closed down that restaurant. Those 10 ACs I will sell. Is sale of AC my business? No. Restaurant is my business. But even then, any supply of goods or services in connection with closure of business is also treated as business. Then provision of facilities or benefits to its members by a club, society or association to its members. So example, there is a resident welfare association or apartment owners association. They will be providing lot of common area maintenance like lift maintenance or garden, security, water supply, etc. And from each and every flat owner, they will be collecting maintenance charges. So that will become business. Then any activity of a race club including betting transaction, that is all activities of a race club including renting of space for horses, sale of merchandise, sale of beverages, sale of food, all those are business. Then all activities of government is covered under business. But only few activities of government is covered under supply and remaining activities are excluded from supply. So this is the meaning of business. So now what you need to understand is, whenever you see a transaction, you will apply 7.1a. In that 7.1a, when you are applying activity for consideration, it is given in the question itself. Whether it is in the course or furtherance of business or not, you need to refer here. If it is coming under this business definition, then it will be business, otherwise it is not. For example, one situation is there. Sundaram Acharya, a famous actor, makes some painting and sells the painting and gets some money which is donated to one charitable trust. Now, is it supply and chargeable to GST? What is your answer? Being an actor, making sale of painting will come under adventure. So the said activity is business. So therefore it will become supply under 7.1a and chargeable to GST. But he donated it to charitable trust. That is irrelevant. So whatever money that he gets, utilization of that money we will not see. We are not computing income tax. For income tax only we will see out of the money on for what purpose we are using. If you donate it, ATG donations and all deduction will come. But for GST purpose, GST is always payable on the gross amount. Gross amount means the total amount, not on the profit. You understood? GST is payable on gross sales or receipts, etc., not on the profit. So therefore, even if they donated it to one charitable trust, or that Sundaram Acharya buys a necklace for his third wife, that is irrelevant for us. So he got money, on that we need to pay GST. Clear? So that is about business definition. We'll take a break and the remaining points we will see afternoon.